Hey folks, good evening to you all. Welcome to another Money Space with me, Kalu Aja. And of course, every week on this space, we're talking money, the economy, personal finance. We want to make you a better investor by giving you those tools, those tips, and of course, those strategies that you can do, you can perfect, and then of course, you can become that better investor. Last week, guys, we talked around the concept of the financial health check. We talked around how you want to design your budgets. We started off with, income. We said how you want to define your income, active, passive. Then we went to expenses. We did non-discretionary expenses. We did discretionary expenses. We talked about emergency fund. We said, listen, your emergency fund has got to be 3 to 6 months of your non-discretionary expenses. We said the entire reason while you are working is to convert your active income into passive income, which means that you want to take all your salary and over the years you want to invest that salary to generate a stream of income that is passive, that you don't have to be at work to earn. We said when your passive income can cover your expenses, especially your non-discretionary expenses, that's when you can retire, right? We then talked about the budget, how to do a budget. We said, listen, list out your income, list out your expenses, categorize those expenses, and then apportion an allocation of cash to that expense. And that's a budget. Then we said when you review that budget every time, every set sessions, you are asking yourself, why am I underspending? Why am I overspending? But the budget has got to be tied back to your overall plan to say, listen, I want to over a period of time convert my active income to my passive income. So I want to say in 10 years, I want to be able to retire, which means I want to make more passive income than active income. So your budget is saying when I earn 100 naira, 10% will go towards my investment, 10% will go towards this, 10% will go towards that. That's why you are budgeting. A budget is not designed to make you stop spending money or to suffer. It's designed to allocate your active income to your expenses so that you can achieve a financial aim. That's why you do the budget, right? So that's what we talked about last week. Financial health check, income, expenses, budgets, even assets and liabilities. We said assets are two types. You have your income bearing assets and you have your non-income bearing assets. So if you own a home and you live in your home, it's reducing costs for you. So that's a different kind of asset that you have if you owned a home that was just not getting you any income per se, right? If you owned a home in the village, something like that, is it getting you income? So we also talk about you have to differentiate your your assets and your liabilities. Some liabilities, hold on brave. Some liabilities you're going to have, you don't pay any costs on them. If your dad lends you money, for instance, you might be lucky and might say, oh, don't pay me any interest. Still a liability, but you're not paying any interest on that. So that's what we talked about last week. So this week, guys, what we're trying to do this week is to take that conversation further, to then talk around the investing side of all this, because we say we want to convert our active to passive. The way you convert active to passive is you invest, right? You invest, you take your money, then you go invest. And that's the hard part about this whole investing thing, because many of us here, we want to invest. We are that disciplined enough to take out money and not spend it. But the problem is that we don't know how to invest. We want to, but we don't know how. We see stocks, shares, Bitcoin, real estate. What do we invest in? And you see folks asking the question, what's the best investment and all that? I always come back to people and say, listen, investing is like you walk into a car dealership and you can afford to buy any car there. So what's the best car you would buy? That's not a real good question, because you buy the car based on what you want to do with the car. Which means if you want to travel from Lagos to Kano, and you want to take bags of cement with you from Lagos to Kano, maybe 100 bags of cement from Lagos to Kano, you are going to buy a truck. You're not going to buy a Lamborghini. It doesn't matter if the Lamborghini is cuter or has better seats. You're going to buy a truck because your objective is to go from Lagos to Kano with 100 bags of cement, right? The same thing if you're going to go on a date, right, with this beautiful lady or beautiful guy or whatever, handsome guy, you want to go on a Lamborghini that's two-seater because you're just going on a date in a town. You want to put the top down, just drive around. Two of you have privacy. You're not going to go on a truck. Doesn't matter this fuel consumption of the truck. Doesn't matter. You're going to buy a Lamborghini because that's what you need. That's your objective. That's what you want to achieve. So what I'm describing is what we call in investment asset allocation, which is to say, in simple terms, we take our objectives. What is my objective? Then I try to convert that objective into a financial statement. Then I invest according to that financial statement. That's asset allocation. That's a big word you hear. So when you go meet a financial professional, you say, listen, I want to retire. That retirement is an English statement, if we could use that term, right? But I want to convert that English statement to a financial statement. So I say, okay, when do you want to retire? For instance, you are 30 years old, you want to retire when you are 50. So I know I have 30 years, right? I have 30 years to work with you. Maybe you're 30, I have 20 years to work with you. So I'll have 20 years to work with you. Then I ask you, okay, do you need liquidity throughout these 20 years? You say, no, I don't want any liquidity. I'm okay. I want to just invest the money. And when I retire, give me what I've got. So that means I don't have to give you any liquidity for 20 years. Then I ask you, what about risk? If you wake up tomorrow and the market is down, are you going to come back and take all your money because you are scared you're going to lose your money? Or are you going to say, well, I have 20 years. It doesn't matter if the market is down for 1 year, 2 years. I have 20 years. You say, yeah, I'm okay with that. I'm not interested in 5 years, 7 years. I'm interested in 20 years. Oh, so I know you have a high capacity to take risks, and I have 20 years, and I have no liquidity needs. That tells me the sort of investments I should buy for you and the sort I should not buy for you. Immediately, I don't have to guess. I know exactly what you need because that's your objective. The same way if you came to me and you said, listen, I have ₦1 million, I'm going to pay rent next year. I just need to put this money aside for 1 year. I need to pay my rent next year. What should I invest for you? I know exactly what not to invest because I already know you have just 1 year. It doesn't matter if the best investment is going to pay me 100% in 2 years. You've already told me I have just 1 year. And guys, this is asset allocation. This is taking your objectives and then matching it to available asset classes to meet your objective. That means that two folks might have different allocations or objectives, right? And then, of course, they will invest different. That's why you should never invest like somebody else. If you have the means to invest longer, then you're going to buy something different from a guy that has to invest shorter. That's the whole idea. So when we say asset allocation, how should you invest 1 million? If I tell you today, I've got $1 million, the questions I ask you determine how I would invest your money. And if you're writing it down, right, there are a few questions that you always want to answer yourself or you want to tell your advisor. Number one is how old you are. Your age is very, very important because your age tells us how many compounding periods you're going to have. If you are 20, then you have more compounding periods than if you are 40. So a 20-year-old or a younger person has an added advantage in the world of investing because he compounds more. In investing, it is compounding that gives you returns, not the interest per se, the compounding period. Last week I gave you the example about two brothers, right? One started early, invested for 10 years earlier than his other brother. He invested just 1,000 when he was 10 years old, and he did not invest again. His other brother invested 2,000 when he was 20 years old, and he invested twice the amount of time that his brother did. Who would have more money? the first brother would always have more money. Why? Because the first brother has 10 years extra compounding. So when we calculate interest on returns, it's a compounding number. The more times you compound, the more money you make. So if you are younger, you have more periods to compound, you have more periods to absorb risk. That means if I know your age, I know if you are going to be more susceptible to equities. Shares do better over the long term, and shares allow you to compound and reinvest those dividends more than, say, fixed income. Compounding is a verb, which means that you have to do something. You've got to take the interest and put it back into the principal and then reinvest it. So it's a verb. It's something that you are doing, right? That's compounding. So the first thing I want to know is your age. What's your age, right? Number two, I want to know, do you want cash? And the same thing, these are the questions you're asking yourself as well. Do you need cash? So if I know your age, then of course the second question is, do you need cash? If you need cash, when do you need the cash? If you need cash, like almost immediately, then I know I don't have to invest your money in the long term, right? I have to go invest your money shorter term. And it's the same with you. If you have rent money or have 5-year money, then where you can invest that money sort of changes. You can't then do long-term investing. Then we're talking about what is your attitude to risk. If you can you take 0% returns for a long period before you make a return? If the answer is yes, that also tells me how to also invest your money. So your age, your attitude to risk, how long before you want your money? This determines where you should invest. So when you go back to our plan, you've done your active income, you've done your passive income, and you have calculated that you need to invest 10%. Again, the rule is this. If you are younger, you have the advantage of investing less because you have more time to catch up. So if you're listening to my space and you just started working in a job, you have an advantage of time. So if you invest earlier, you invest less, but you make more than someone that invests more. Again, when I say more and less, don't look at the Naira return. Look at the percentage return. So a 25-year-old person investing today is going to make more than a 40-year-old person that invests later on in life because you have more compounding periods. So back to our example. If you are if you're a young guy and you are investing your passive income earlier, you are going to invest less passive income because you have more time to compound that return. If you wait till you are older, you are simply saying you then have to invest more principal to hit that passive income target, which is now going to be more difficult for you. Because if you don't have the income when you are older, then you are not going to meet your passive retirement target. So you want to start very early. You want to be consistent. You want to be long term when you are investing. And you want to target investments that pay a compounded rate of return. What is a compounded rate of return? It means that the principal or the interest goes back to the principal and then you reinvest it. It means that if you have a shop and you sell your goods in the shop and you make a profit, you take the profit to buy more goods, then you sell more. The same way Dangote takes the profit from rice to build cement. Now he took the profit from cement to build a refinery. That's compounding return. It doesn't mean you have to go to the bank to compound. If you're a farmer, you farm, you get the corn, then when you harvest the corn, you take the harvest and you plant back to grow more corn. That's compounding. If you're an investor in equities, when you buy shares, you take your shares and then the dividends, you buy more shares so that you then are growing your portfolio from just that same pot. That's essentially what compounding means. Now, guys, if you look at my Twitter feed, I just shared with you from my book, Let's Talk About Your Money. You should get that book, right, on Amazon and on Roving Heights. Age-based asset allocation schedule. Just like a framework for you. So you can see from that schedule what I shared on Twitter. It's the last thing I just shared on Twitter. As you are going older, you are going from equities, which is risky, but gives you the advantage of compounding, to debt. So as I'm getting older, let's say I am 20 years old, I'm putting all my money in shares. Why? Because shares over the long term can beat inflation better than most asset class investments. Also, shares allow me to, should we say, take advantage of the long-term growth of a company. So I'm doing shares, right? But as I'm getting older, what am I doing? I'm diversifying my portfolio from shares to now fixed income. So I'm buying some fixed deposits. I'm buying some bonds. I'm buying some real estate because I'm getting older. Also, it's cheaper for me to buy shares when I'm younger. I can buy an ETF, I can buy a share of a company that is just small. Imagine if I bought Tesla when Tesla started. So I'm growing with Tesla. But as I get older, it's becoming risky because shares can go up and down, up and down. I don't want to take that risk. So I want to then start to change, to take my investments away from variable income to more of a, should we say, a fixed income where I'm more sure. Because as I get older, my compounding periods are reducing. So I have to take less risk. So if you look at what I just shared on Twitter, that's just a very, very generic way of explaining that. And I'm going to share another one that I talked about the asset classes that are more suitable for you when you go. So this is just to share about the timing. Next one I'm going to share, I'm going to allow Brave and Capital to speak now. Yeah, and if you have questions, guys, again, try to speak. It's difficult because I have a lot to say, but I don't want to keep on talking. I know most of you guys have questions, and then you can more or less ask those questions, and I'm able to answer. So, Brave, did you have something on your mind?
Okay. Good evening. Good evening, sir.
How are you doing today?
Good evening, everybody. In terms of investments, and a lot of people are like, you want to invest. First of all, I want to talk about like what you should invest, not like a particular.
No, do you have a question for me?
Is it me?
Yeah, do you have a question for me?
No.
All right, so let me just continue. So, what about wow me, woe am me? Did I get that right? Woe am me? Did I get that correct? Woe am me? Yeah, your hand is up. Go ahead. Woe am me or Moriah? Let me get Moriah. Moriah, how are you doing? Moriah, please go ahead and speak. I've got Moriah. I've got Woe am me. Either of you.
Hello, good evening, sir.
Yeah, can you just raise the audio just a little bit up? I can hear you. Go ahead.
Okay. Can you hear me now?
Yes, I can. Go ahead. Shoot.
Okay. It's actually who am I?
Who am I? I see that. Yeah, I see that now. Who am I? There you go. All right, go for it.
Thank you very much, Mr. Carlo Aja. I really appreciate it. This is my second time joining your space, and I really want to thank you for the financial knowledge I'm getting. So, and also, I also want to recognize the presence of Mr. Olumide. I'm reading the street on finances. Thank you very much. Now, here's my question. I'm a student from the University of Lagos, and most of the income I get are actually the one I try to work around because I do part-time teaching, but I've stopped because we are in the holiday now. Now, how do I start working on my finances from there? How do I invest from the little income I get from teaching or maybe from relatives and other stuff? Because I know that maybe if my parents give me a certain amount of money, I want to keep maybe 1,000, 2,000. Okay, this is for investing. Now, when I keep that amount of money, which investment should I put all those money into? Maybe like 5,000, like 10,000 that I've saved out of my end income. So that's my question.
Okay, so if I understand, so essentially what you're asking me is this was maybe in the last week's episode we were talking about how you should basically plan out your entire finances. So look at it this way. It doesn't matter what you are doing. Whatever you are doing, you want to have a process whereby you can capture income and you can invest. Now, last week I said this. If you get money on your income side, whether it is active or passive, you have got to try to work with a certain percentage and put it away and invest a certain percent away. There is savings and there is investing. Savings simply mean that you got money and you didn't spend it. Investing means that you have a conscious decision to say, I want to make 10%, I want to put it in this place to make 10%. So I don't know how much you are earning, but the first thing you want to do is to write out your income and expenses first before you invest. Write out your income and expenses, track that income, track the expense, and let me know when you. So in your expenses, you then allocate into 2 chapters. You would have one called non-discretionary. You have one called discretionary. The non-discretionary means this is your expense that you must make. So for instance, you must eat, you must pay rent. If you fall sick, you must treat yourself. That's your non-discretionary expenses. So what I want you to do first is to ask yourself a question and say, the income you are making now, because you said you're a student, is that income able to pay your essential expenses? If it's not, your focus right now should just be on creating an emergency fund, not really to invest. You want to create a fund where if you enter into trouble, you can go there and get money. You're not yet at the stage of investing if you don't have enough income that can at least cover your expenses. Because why invest when you are struggling on the income side? So if your income cannot pay your non-discretionary expenses, that means what you're looking for today is just going to be an emergency fund to say, I want to save 3 to 6 months of my non-discretionary expense. That's my target as a student. If your expenses, your income is more than those expenses, good, then you can then start the process of investing, which you then say, okay, at your age, I would say you should look at maybe something along the lines of an equity fund, something that you can buy, maybe an ETF or a mutual fund that you can buy into equities, because you don't have the funds to buy the equities individually, but you want to get into that fund so you can spread, diversify your risks, and because you are younger, that allows you to then compound your investment. That's how I would approach it. First of all, do your expense analysis and see if your expenses can pay if your income can pay your expenses. If it cannot, focus on building an emergency fund. If it can, then go to the next page and say, I'm going to take a certain percentage and try to do an equity fund. Does that work for you, sir?
Thank you very much. It works for me. You have actually given me a clear roadmap.
Okay,
that's
how I want you to do it. Right, great. Let's get Moriah. Moriah, how are you doing? Moriah? Okay, I'll take him on. Let's go to Ogbe. I can't pronounce the name. The Zenith Food and More. How are you doing? I've got the Zenith Food and More. Let's get.
Hello, I think this is Moriah.
Moriah, your audio is very low. What's on your mind?
Okay, is it better? Can you hear me now?
No, not really. So if you speak, I'll try to relay. What's your question?
Okay, so my question is, you've actually delved a part, you've answered some part of it because it concerns savings. Okay? So there is an article that I was reading some days ago about savings. And in the article, I shifted my thoughts about savings, because before I used to be an aggressive saver. I used to save, a huge chunk of my money for maybe emergencies and for other things that I wanted to do. But at the end of the day, I still find out that I don't actually spend the money that I save on something tangible or on something meaningful. It always ends somewhere that I didn't even plan or budget for. So in the article that I read some days ago, it categorically said that it is easier for someone to, let's say, to invest than how easy it is to save. So I now shifted my mind. I now had a mind shift towards investing, rather than saving aggressively as I was doing before. So I just wanted to be clarified.
Yeah.
If it is very okay for any penny that comes to someone's hand to spend it on investing rather than saving.
So,
as I was.
Mariah, this question you're asking. So, Mariah is asking, I really ask about savings, investing. Should he save? Should he invest? Mariah, your question, right? I get this question all the time, and it sort of reveals what's the word now? It's sort of a lack of understanding of those two terms, savings and investing. Let me break it down for you. If I give you a 10,000 naira today, and you don't spend that money, you have saved that money. There is no once you have the money, you haven't spent it, you have saved it. Whether you're an aggressive saver, it simply means you haven't spent as much as your income as you have received. So anybody can save, but not everyone does investing. Investing goes further. Investing is saying you want to take that savings you have made and then try to achieve an objective. That objective could be you want to buy a house, or you want to just have an emergency fund. So the way it works, like I just explained to who am I, right? Before you start to save or invest, you have to do your expense analysis first. You have to plot your income versus your expenses. And you have to ask yourself, the income I am making, can it cover my non-discretionary expense, what we call your essential expenses? If the answer is no, there's no point investing because you can't afford it. Because if you buy an investment, you end up selling that investment to pay your bills. So your focus should be on increasing your income or building an emergency fund, not to invest. That's where you stop. So once your income cannot cover I didn't say all your expenses, your non-discretionary expenses, you stop right there. You focus on your income or you build an emergency fund. You only then move on to investing where you are able to cover your essential expenses. Then you say, okay, I want to down invest. Because we don't want you to buy a very, very good investment and then sell it next year because you had to pay rent. So you've destroyed the compounding advantage of that investment. That's why you can't invest unless you're able to analyze properly what you need to cover expense. If you can't afford it, then don't start. Then you want to focus way back on building income, or just focus on having an emergency fund. It's okay, if anything happens to me, I have 1 month cover, I have 2 months cover. Look at Nigeria. Nigeria has a foreign reserve, and Nigeria will tell you with our foreign reserve, we can pay for 9 months imports. That's the whole idea. See how they attach foreign reserves to import, because they are saying if anything happens to Nigeria, at least we can pay for this import before we go to IMF or so and so. Does that make sense, sir?
Yes, thank you very much.
So follow that. Don't invest unless you can afford to hold an asset. Holding an asset means that you are holding it for the compounding gains, and you're not going to be rushed to sell that asset should anything happen to you. Right? Excellent. Olumide, how you doing? What's up, man?
Great, Carlo. Good evening. Very interesting space as usual. I just wanted to add some color to what you said.
Please go ahead.
Yeah, so basically, investing has been a very interesting topic, particularly in the Nigerian space, because a lot of people want to grow their income and midweek disposable income. But I just wanted to share and ask Kalu just 1-2 questions. But first, I'll recommend this book. I think I'm trying to look at the Twitter thread where I gave details about his book, because honestly, the unique thing about Kalu's book is that it has a foreign and local dimension. So, many of these American writers cannot localize some of our problems, but the Kalu's writings help to bring those contexts. So it's very easy for you to relate as a Nigerian. So the book, like he said, is very cheap, 18,000 naira. It's highly subsidized, trust me. if you look at the cost of printing and other things. But coming to the main topic, investing. Carlo, this year I just want to highlight some problems and ask you that question. So I figured out that many Nigerians don't really know what investing is. Then you see, if you look at the major problem we face, particularly in an era where sport betting is more popular than any financial institution in Nigeria, people tend to desire quick money, and people tend to feel that investing is actually a process. Like you heard what Carlos said, you must have emergency fund, you must have the knowledge to discern information, you must have the ability to allocate. So these things are not just acquired straightforward. You must be processed in thinking, and the ability to also sieve information is very critical. Like this year alone, as a Nigerian, if you just even invested in local markets alone, you've done very, very well. Like our money market was giving as high as 22%, different money market, and it was safe because it was invested in the government's debt, and Nigeria's debt, federal government debt, is the safest investment because the likelihood of defaulting is quite low. So, yeah, you might not have covered your inflation in terms of real rates because inflation is higher than 30%, while you get 22%, but you've done better than what you get in your bank. Then you look at stocks, you know. So the context here, Carlos, is that people argue that we don't have money. People say it's very difficult to save. It's very difficult. Yes, we get it right, but we've also realized that habit, attitude, the desire to grow one's capacity is lacking in the space. And you know, this is one space I think everybody should stay till the end, because Carlos is a good example of someone that has been in the space for so long, and he's not just someone that understands money. You can see it in his thinking perspective and the way he tweets. People think money is just all about Ferrari, G-Wagon. No. Financial freedom is very important in our lives because it provides that security and makes our capacity fulfilling to achieve greater heights. So, Carlo, those are the things I want to ask. But one question I want to ask you, Carlo, is that, you know, your book, for example, all the things you want to say on this space, your book explained it. But the question is, are there ways Nigerians can get your book that, because I know that there was this bookshop on the other, I can't remember, Roving Heights here again, but are there ways Nigerians can get this book so they can make it more interesting by just looking at the pages and asking questions rather than just going, because you can't explain everything in that book, it's impossible, and you can't even pick many of those points. So are there ways that the audience can really tap into that book?
So we don't have e-copy. We have the book is on Amazon. There's a Kindle version. We're working on an audio version. The book is printed in Nigeria and the US. So again, I give the book out for free. You know, like in Nigeria, it's 18,000. Doesn't even cover the cost of printing. But I think the only way is to just get money together, buy the book, and read it. It's a lot of pictures. I put pictures there on purpose, right? Because I'm trying to explain what the quote unquote Goldman people do with your money. I'm trying to break it down to very, very simple language with pictures. So if you look at the Twitter feed, I've shared 2 already that talk about age-based asset allocation and of course asset-based asset allocation. There is nothing new in finance. If you go to Goldman Sachs, or you go to IBTC, or you go to any bank, and you say you want to invest money, they're going to use exactly the same stuff I just shared on the feed, and I wrote on my book. They're going to use exactly that to manage your money. So I'm not asking you have to be an expert to understand where money is, where the options are. But if you understand at least what's going on, you help yourself. You can see before you can afford Goldman Sachs or IBTC, I'm going to take 10% of my income and I'm going to invest in a mutual fund in Nigeria. Why a mutual fund? Because you don't have the funds to buy the shares directly. One share of Dangote might be 20 naira, but a mutual fund can be 25 naira. Same with abroad. With $25, you can buy into an ETF. You can buy VT. And with VT, you buy the VT ETF. You've bought really all the shares on earth that are good, in quote. Or you buy VTI. You've bought all the shares in America, about 5,000 shares in America, Tesla, Microsoft, Nvidia. You've bought all those shares by just buying VTI, which is an ETF, with $25. So you can get into the quote-unquote ecosystem of investing by very, very little amount and with very, very little knowledge. And as you grow more, then you can then say, okay, I want to hire an advisor to then talk to me, because I can afford it. But what you must not do is to wait, until you have the means before you invest. Remember what I said, investing is about compounding. So when you are younger, you have an advantage. If you are younger, you have a bigger advantage than Dangote has. Dangote is already old. His years is already old. If you ask Dangote today, give him $1 billion or give him 10 years, which do you think he would choose? Anybody in this space, if I give you $1 billion today or I take 10 years, only the younger people will say, give me $1 billion. The older folks will say, give me 10 years, because they understand that time is money. So, Olumide, this is a great question. I mean, the best I can do, if you have the book, you bought the book, you want to ask me a question, DM and say, I don't understand this, I'll answer you. People send me DM, I answer. Put it on TL, say, I don't understand this, explain this, I answer. I don't charge you, right? So take advantage of it. When I market the book, people think I'm not making any money from the book, but it's, I've worked in America, I've worked in Nigeria, I've worked with rich people, I worked in private banking, I worked in endowment funds, so I put all that in that book, and I said, buy it. And it's a doing book. It's not a theoretical book. It's not to say go and invest. No, I tell you how you should invest. I tell you how you should start. I tell you the ETF, I quote it, I name it. I tell you this is the name of the fund. Google it. I give it to you. This is the name of the app. Go and do it. So it's not you buy the book and I'm giving you motivational talk. No. So if
Carlo, because most of my friends that got the book, we're in Nigeria, they actually had it turned around investment. And the funny thing was that, while we're in Nigeria, it was around February, March. So they had the opportunity to reallocate their assets. And they were like, it made a lot of sense. It was just that they found some paragraphs a bit technical, which I understand that some non-professionals might not understand. But the book is very simple. And you look at the questions on the space, it tells you that there is this lack of depth in financial literacy, and it hurts me, because how can you explain a country like Nigeria where 100,000 people actively got involved in Nigeria's stock market? How can you explain a country like Nigeria where people don't understand the difference between gambling, investing, speculating, hedging? So, if we come to this space and we talk, it really is not fulfilling when there are basic things that you could just have read through the book. And the book is very fulfilling. I recommend it, and I tell a lot of my friends, most of my friends have it. So it's not that this is something that is, but I've read it. It's very sound. It's helpful. Like I said, it helps you directly as a Nigerian. This is not foreign language. This is somebody that understands Nigerian market. And, Carlos, it takes me to this question that I saw that many people ask, that maybe it's also in the book, like, in terms of the fact that, okay, you know the state of the economy now, and you know that many people don't have access to the US dollar. Is there a way, like, you're an expert in index, like, how can the average Nigerian go into index investment to hedge against Naira devaluation? Is there any possible way that the average Nigerian can tap into it?
Unfortunately, someone asked me that exact same question just now and said, I'm a Nigerian, I don't have social security, I want to buy ETF, but the Nigerian apps are charging me a lot of money. There sadly is no other way, because unless you have a social security number, right, you can't go and open an account abroad. So the Nigerian apps are at least giving you a way to do it, but they are charging you, right? So when I was growing up and I was investing in Nigeria, you could only invest in Nigeria. You couldn't invest in America if you are a Nigerian. Even so, you couldn't. Now, if I live in Nigeria, I can buy Tesla from Nigeria in Naira. Highest, I'll pay more. So it's bet it's I think it's okay for me to expose myself to the US market at a premium. The same way you when you buy Bitcoin, you pay a premium. I'm willing to take that premium and expose my earnings to a foreign market than not to do it. That's how I would say it, right? Because if you wait, again, time will not wait for you. If you wait till you cannot, till you have a social or we're able to do it, the opportunity might go away. If you look, let me talk about the US market just for a bit. If you go back 10 years, and when I say 10 years, I mean this 10 years, and maybe go back the last 10 years, maybe 20 years, but let's just say 10 years. What is the best return investment of an asset class in the whole world? So let's talk about maybe Japanese property, English bonds. Let's talk about agriculture in Brazil. Any asset class you want to pick in the entire world. What was the best returning asset class in the entire world? The answer, the answer is U.S. equities. U.S. stock market is the largest, most liquid, and the best performing asset class in the entire world. It's beating Nigeria. So you have Nigeria in 2 years out of the last 10 years was the best performing market in the entire world, Nigeria. But the US consistently will give you your 6 to 8% consistently. So over 10-year period is the US market. So if you are a Nigerian, any Naira in Nigeria, it would be, should we say, underwhelming of you not to expose yourself to that market, even if you are going to pay at a premium. Whatever you buy today, over time, those costs will be amortized, but then you are already in that market. I have a group, I think it was 4 or 5 years ago on Twitter. I asked people, and I said, if you are young, you have money, you want to invest, I don't recommend stocks online, but I recommended this particular one. It was VTI. It was an ETF. It invests only in the US market. VTI ETF. We got a lot of young Nigerians. We created a group and they bought into VTI ETF. I go back to that page and I go and I laugh on that page. They're all making money. Compare 5 years ago. Go back. Look at the price of VTI ETF. Many times the stock has fallen. I'll tell them buy. The stock has gone up. Some have held on. Some invested with very, very little Naira. And the group is 2030. So we started in 2020. Yeah, we started in 2020. So by 2030, we're going to have, what did you make in 2030 from just investing in ETF? And the group, so now on Twitter, how much did they invest? So, and it's still not late. The best time to plant a tree was 10 years ago. What's the next best time to plant a tree? Today. So I don't do the trading. I don't do the buy today, sell today, or take. No, it's a very simple way to invest. You look for a company, or you look for a country, or you look for a sector that is growing, and you buy in today. You invest your dividends, and you go to sleep. Rip Van Winkle portfolio. You buy something that is going to go up tomorrow. You reinvest your dividends. You go to sleep. You don't have to trade, buy, do. No, just keep it simple. It always work out for you. Lumide, thanks, man. Appreciate you so much. Yeah. All right, let's get Julian. Julian Olawale. Lumide, hang on, don't go anywhere. Julian, what's on your mind, Julian?
Hey, hi, Carlo. How's it going?
I am doing very well, sir. Thank you.
Am I being heard clearly? Just want to confirm.
Yes, and I can see my friend. Yeah. I'm going to bring you up. Yeah, Julian, go ahead.
All right, cool. First of all, thank you. This is my second time being on this space. Last week was my first, and I've been wondering what have I been doing with my time.
See?
But anyway, I just want to I have a lot of questions, but I have to crystallize them to just a few because of other people. First of all, I want to jump on what Olumide said. How can I get that book in Nigeria? I haven't seen anywhere. So please, could you give us a how to, where to get it so we can get it like tomorrow, if possible?
And
That's
so,
my first
so
question.
honestly, to you, we used to have it in Roving Heights. I don't know if they still have copies, Roving Heights, but I will try to order. It's so difficult to export to Nigeria. I'll try to order and send to Nigeria again. But Roving Heights is your only and best bet to get the book. We don't have e-copies, so it's Roving Heights. If you have a friend abroad, let them buy it for you. Lots of people are coming to Nigeria. You can buy and send it to Nigeria. It's also something you can do. Yeah, it's on Amazon. It's on Kindle. It's on Amazon. You can get it. Yeah.
All right, cool. Okay, I'll work on that. I'll go and check on Roving Heights, and I'll see what else we can do. Please, if you can send something to Nigeria, please, so I can send to give my friends as well. That's the first one. Now, my question is now like a broad based. My second question is kind of broad based. If, for example, the dollar crashes, that's just me being hypothetical. What other sectors, what other markets can someone use to hedge or prepare instead of just keeping all the assets in the US? Or do you think the US is something we should just hold on to for the next couple of years? That's just the question.
Let me answer your question this way, right? If tomorrow we hear that aliens have landed on Earth, or there's a global, let's be serious, if there's a global economic crash, or there's a war, what assets go up in price? Name one particular asset that goes up in price. If there's like a war or there's uncertainty, do you know what goes up in price? The US Treasury bill, the US Treasury bond, or the US. Why does it go up in price? That's safety. The US is the reserve currency of the world. The US has got aircraft carriers, they've got nuclear bombs, they can bomb you if you disobey. So Switzerland is a more stable economy. But Switzerland is not going to bomb anybody. And I'm being honest. So the US can enforce the dollar. The Switzerland cannot. So when you see uncertainty, what happens? The dollar rises. So when you ask the question, you say, well, what if the dollar if the dollar crashes, then the whole world has gone into a recession, which is what happens in 08, 07, where we had the recession that occurred only in US real estate, but affected the entire world, even Nigeria. So the US is the barometer. Is the temperature gauge, is the whatever. If the US catches the cold, then the whole world gets AIDS. So there is really there's what in finance, what we call TINA. There is no alternative. If it's not US, where are you going to put your money in the whole world? If it's China is the largest economy, right? Some I argue is larger than the US, but you can't put your money in China. There's no Chinese yuan being sold in Lagos streets because the Chinese guys have a different way of running their economy. Maybe they are communists. You can't really trust, and not that they are bad, but it's not as an open society as the US. Switzerland is a better economy, like I said, but it's a small market. It's a small market. So, unfortunately, we're in the age of TINA. There is no alternative. So, I would say, yes, diversify into the dollar, into Swiss francs, into the Australian dollar. That's where you have diversification. But in essence, it's all the same thing. It's all OECD. There's no difference between US and Australia and Switzerland.
Wow. Okay. Thank you.
Okay.
Okay, my last question. Sorry, that's my last quick question. I realize that I've been studying investing. I've been reading that for years, but my major issue has been the how-to, what to do, what to say. I mean, the steps to take. I only got that this year, sadly. Yeah. Now, I would like to ask this: can your book? I'm just throwing it out there. Can your book help me with the exact how-tos,
that's what the book is literally all about. I literally take out my budget sheets. There's a budget sheet there that has generator. US budget sheets don't have generator. It's right there, budget sheet. I talk about RSA, retirement savings account. I talk about Roth, so US and Nigeria. So I'm writing a US book, but with Nigerian concept. I'm not writing anything new, but I'm making it Nigerian. That's the point I'm telling you. When I talk about ETFs, I give you the Nigerian ETFs. I give you the foreign ETFs. I tell you how to do a budget. Step 1, step 2, step 3, step 4. I tell you what is non-discretionary. I give you the example. So literally, I'm not writing a motivational book. It's chapterized, which means you can read just one chapter and leave it alone. You can read just a chapter on Bitcoin, or you can. When I talk about debt, for instance, I use Ngozi's restaurant. Ngozi has debt. What are her debts? I use Okada. She's owing her town union. She's owing her husband. These are Nigerian things. A book, Rich Dad Poor Dad, will not talk about Ngozi owing her husband or owing her cooperative. Then I say, okay, how should she get out of debt? I tell you how Ngozi is going to do her debt, how she's going to record all those debts, which one she should pay first. And this is the same example that most SMEs in Nigeria have. You are owing your cooperative, you are owing Okada, you are owing your in-law. Who should you pay first? How should you plot out? So again, I'm not marketing the book, but I am. It's a to-do book. It's not this book. Rich Dad Poor Dad gives you a concept that it tells you that watch cash flow. It changes how you follow about life. But this is more or less. It's going to tell you what to do. I want you to. It's a doing book. So it's that's what I'll say. Yeah. So go get it. You'll like it. Get your friends to buy it for you. Send it home to Nigeria when they're coming back, and you'll love it. Yeah.
All right, I'll do that. Thank you very much. Next time.
You're welcome.
Bye.
Thanks so much. I've got yeah. How are you doing? Long time.
Hi, how are you doing?
I'm doing very well.
Longer time indeed.
Where have you been?
I have been on the streets of Lagos trying to meet my numbers.
Trying to meet your
So yeah, so just to give a little bit of context as to why settling US stocks in Nigeria, why it's so difficult. Number one, the reason is, as you know, SEC rules have changed, and the only way that we can, as fund managers, collect money from clients is if we open a custodian account. And so there are some custodians that would definitely settle your US stocks, but because on the other hand, yes, they are the custodians, it settles on Euroclear, and there is a cost associated with settling US stocks on Euroclear. So what they typically do is that they pass that same cost to us. Now, for some other custodians that do not have their own Euroclear, they're using an agent. So they're also going to pay that agent. So like you have said, it's usually just better that you just buy you save up money, small amounts of dollars some way, and then they can say, okay, I'm going to buy this particular ETF. Even when we're advising clients here, at least for my own clients anyway, I usually don't pick individual stocks because there's so many stocks that you can pick from in the US and in the UK. So it's just usually better to just do the ETF, maybe pick a few high conviction stocks that you might have, and then take it from there. But it's really expensive because the cheapest way for us to do it would be to sign up directly and then now have sub accounts. But we're not allowed to do that. We're not allowed to do that anymore. So we can't open brokerage accounts directly. So that is why it is expensive.
You would think that, something that we could go to talk to Mr. Trump about, right? So Africa has African Growth and Opportunities Act, which means that Africans can export to the US without tariffs. What if we have a stockbroking version of AGOA where they say, okay, if you're in Africa, they'll allow you open up a special kind of investment account, which would then allow Africans to buy, equity abroad, even if it's low amount, they can cap that at $1,000. It won't affect the US. It will give a lot of Africans, that exposure to a different kind of currency. It's something we can explore because, like you said, there's no going around it. It's going to be expensive. Yeah. It's going to be expensive. So yeah.
I think we are. And then how many? And then trying to get even for us to get KYC, the amount of documentation. If you got pregnant the time when you started KYC, your child will be over a year old by the time you get it done. So
Americans don't play.
If you like no, they don't. No, not just UK. Even in the UK, everybody outside of Africa does not play. Really, something as little as your utility bill not being in your name is enough for it to be triggered.
And we don't have utility bills in Nigeria, so Olimide, you are saying that we have. You are saying we have.
Yeah. No, I think the issue facing Nigeria is the government, the fact that we are still on the grey list. Because okay, let me give you three. I have friends that are in Ghana, Niger, And this African country, they can trade stock options with interactive brokers and trade station.
Wow.
American brokers
Nigerians can't. Nigerians. So we
Nigerians are not even, if can even make you laugh. In fact, even if you have another passport, for example, and you mistakenly put Nigerian because you ask the question, are you from? Is there any way you were born or you have blood ties to? You just put Nigeria as this thing. Your approval takes longer processes. This is something that happened directly to me. So yeah, we have a government problem, and we also have the fact that our government really doesn't see investment because, just like you said, there are African countries that are taking advantage of the US market. African citizens, like I mentioned, Interactive Broker is a listed stock brokerage firm. TradeStation is owned by a Japanese multinational. And if you check in big, so the only options Nigerians have is either, like you mentioned, you have a US visa that you've gotten a social security number, you have dual passport, or you have this European residency where you can trade through the new banks like Revolut, Monzo, and things like that. So my advice for Nigerians is that if you can't, like Carlos said, then you definitely have to stick with Nigerian fintech apps. The only problem with Nigerian fintech apps is that you need to understand that the exchange rate you are paying for is higher than black market rate. I tried to do a tweet. I was trying to explain to Nigerians what the cost is. So if you look at Wema Bank this year, Wema Bank had a year-to-date return of 59%. If you look at Tesla had a year-to-date result of about 69%. But the Nigerian citizens that bought at Tesla this year through their fintech app made less than, because when you look at the fintech rates, give or take, I'm being very conservative here, is 15% markup, buy and sell. So when you minus deduct 15% from Tesla's return, then you deduct another 3 to 4% from transaction cost. Look at the person in Nigeria that just has to pay about 3% cost. So you see that at the end of the day, the guy that just bought Wema Bank JJ with even the Naira rate did better. So these are things Nigerians need to be aware of.
But there's a Nigerian app that allows you to open like a bank account from Nigeria. I had them on my space. Is it Canva? Jesus.
The problem with those apps is like, because, so let me explain. Like I know, like we have so many, like so many. The issue we have is that custodial insurance and the what rate that you get, you will never get a ACBN rate because you don't get. So for example, Carlo, the CBN rate is 150. So if you're going through those systems, you are paying maybe 1718. So what's the advantage? The only advantage is that you can convert, but the margins the Nigerian is paying doesn't really make sense investment, because if you are paying, if the official rate is 1,550 and you're paying 1.8, you are paying money. Your money market, that's about money market rates for heaven's sake now, and like putting money into money market. But it's for, like you said, if you are investing long term, it makes a lot of sense, because Tesla did 100% in 2023. Now it's doing 67% this year. Now, if you do on a long version, they definitely, American stocks are far ahead. But Nigerians are not long term, Carlo. That's another problem in investing.
Nigerians are not long term. That's a big problem. And again, why when we say long term, what we're saying is a compounding period. Your compounding period is really the secret sauce. When Einstein says compounding is the eighth one of the world, it's talking about the compounding period. The more you compound, the more money you make, your risk falls. Let me get Obutuaka.
Obutako.
Sorry about that. How you doing?
It's okay. Hi, good evening, Mr.
Good evening.
Carlo, Mr. Lumide, and every other person on the space. I'm a big fan of both of you. So, Mr. Olumide already addressed what I wanted to highlight. So, we've been very much on US stocks, and I wanted you to throw more highlights on Nigerian stocks, because I know that some Nigerian stocks really performed more than 30% this year, like Cornell, Julius Berger, United Capital, and the rest of them. And I wanted to ask if, I mean, should we still look, even though some of us are looking at bullish on the US stocks, can we still have hope or do something with the Nigerian companies that are performing well now.
Olumide is your guys going to answer, but I will say this: diversification is key. I have Nigerian stocks, I have US stocks, right? In Nigeria, I think at the beginning of this year, Nigerian stocks were beating inflation. I don't know if they are still beating inflation today. I can check, i.e., the index. If you bought the index in Nigeria, you are beating inflation. I don't know if they are still beating inflation today, but I would say overall, look at it this way. One of my mentors, his name is called Warren Buffett. I call him Uncle Warren because we're related, right? He says when you want to buy stocks, you buy when there's blood in the market. So that means that you buy when everyone doesn't like the stock, and you sell when everyone likes the stocks. So if you are an investor, is Nigeria good? When I mean good in terms of returns, is Nigeria good or bad? If you're an investor, what would you say about Nigeria? If Nigeria was a stock, the whole of Nigeria, do you think Nigeria is a good stock or a bad stock? Where'd she go? She dropped off. So if Nigeria was an investment, right? Many people say Nigeria is quote unquote bad, or should we say undervalued, lots of bad news, lots of earnings that are just lots of bad things. That says that I should buy it. Because if I'm buying it at a discount. The naira is bad, inflation is high, growth is low. So if I'm buying Nigeria right now, I'm buying Nigeria at a discount. Because if Nigeria gets good, then all the stocks that are supposed to be cheap or that are supposed to be bad now become, should we say, good. Because imagine the economy today starts to consume and starts to grow. What it means is that those stocks that are bought that are bad now start to grow again. So that's looking at it from a top-down approach. Olumide, she's asking, should we still look at Nigerian stocks? I mean, what would you answer to that?
Kind of interesting. If you look at this year was a year of blue chip stocks, and I think the energy industry was exceptional. In fact, I said if you were just a blind man and you picked any energy stock, you make serious money. Conway did over 200%. Wando did over 500%. Total Energies, Green, they all did better than the US dollar. In fact, Zeblad's exceptional. Now, this is the context here. Why are all stocks doing very well? Definitely Dangote Refinery. The regulation looks like it's taking shape. So the interest is growing. And we're anticipating that Dangote will this next year. So that will definitely also shake the stock market by another 30 to 40% in market valuation, at least based on. But the problem is that the stock market over the years, in the space of 3-4 decades, have lost the attractiveness it once gathered because of some mishaps in the that hasn't changed the fact that Nigerian stock market is the place to be. So if you look at this year, for example, like I've always openly declared that I have exposure in most of these stocks. Now, let me give you an example of the UBA, for example. The UBA is a stock that you don't want to miss out, but people oftentimes get bounced by buying at the wrong time or not knowing buy. So if you look at this year, UBA almost fell, at some point fell below around the cleaner, do the math. So Nigerian stocks, you need to understand their market cycle individually and index. Banks are very liquid. Next year, it's very tricky to know the projection of Nigerian stocks because, like I said, it's not that there's any clear, like what you see in the US, you see clear. Energy stocks have been ruling since President Tinubu got into power, and we expect that to maintain because when Dangote comes to power, it's going to when Dangote Refinery comes to play, it's definitely going to shift the index. And you saw that Oando had Ajib covered, Zeblat Exxon will be approved, Renaissance, Shell. So these things boosted market. But next year is a different ballgame entirely. So this is what I tell Nigeria. First, you need to understand what investing in Nigerian stock market is. The opportunity is that you have less risk compared to US stocks. US stocks, I had some stocks in here that, like look at Supermicro. It fell in a day, fell 40%. That will never happen in the Nigerian stock market. There's a maximum peg at which a stock can drop. So, yeah, you can say Naira is not very attractive, but certain investment this year has done better than those that even held the US dollar. So I tell people that stick with your investment banks. Those guys there, he is part of somebody that I really relate with very often. She's very knowledgeable in the space. She works there. She's a fund manager, and she has been in that space so she has that integrity. So those are the kind of people you have to engage with, because people think you are just one wizard. No, those are the kind of people I associate with. I ask questions. When I get confused, then I also understand the peculiarity of the Nigerian financial system. Nigerian banks will always be Nigerian banks. They'll always keep making money. So you just need to know when to get in and when to get out. And finally, you also need to understand that investing is not marriage. Because you buy a stock does not mean you're married to that stock. I think that's where a lot of people get. Because the mistake some of our parents made was that, they bought stocks in share certificate. They kept it like as if they thought they were keeping... sorry, a call came in. They were keeping a live contract, which definitely caught them in trouble. Apart from Nestle and very few, most stocks don't do so well in 30. Nigeria is still a young economy, so you need to be aware that Nigeria is not America. You need to have the short, mid-term perspective when you're looking at Nigerian stock. Thank you.
So, Linda, I heard you say banks, I heard you say energy. So, if I had to buy today, are you saying that what I should just be into like Dangote? Again, answer that one first. Is it just energy and banks, or?
Let me give you a straightforward answer. Inaka, one of my favorite bank CEO, she bought. I can't remember the number of units of Fidelity she bought last month at 15 naira, close to 16 naira. But look at the price of the stock, and if you look at the historical data of insiders buying, they always outperform the market at least 6 months. So I don't think Inaka will spend millions in the assets she governs and lose money. I don't think over the years, because this is someone that has returned great amounts of high returns, to investors. So that's a good example.
Just to put our listing, Nneka is the MD of Fidelity Bank. Just so
yeah. So you need to understand where and how key players are coming into the market. So, for example, Nneka is buying. Is it a good time to buy? Well, ask your broker about it. You look at next year, the windfall tax, is it going to still take effect? When you see banks falling, when you see prices are quite attractive, and you look at the historical data, consult your broker, look at the research, look at the candles, read news around the bank, look at their results, then it's possible. But one thing I always say is that it's much better than doing nothing.
I mean, look at it this way, Olumide. I say in the last decade, like I said, Nigeria has been the best performing stock market on earth in the last decade twice. And both times were because of Dangote Cement. Dangote Cement alone. So obviously, you should have Dangote Cement one way or the other in your portfolio. Look at Nigeria again, telecoms. We are talking now is a commodity, right? So when the commodity say we have to talk. So we have to eat and we have to talk. So MTN, Airtel, we have to talk. You've mentioned energy. They've removed the subsidies. So if you have a Dangote is now in Nigeria refining. So if you are retailing, your margins a bit more, should we say, sterilized. You are making money from the higher price of petroleum products, not just from petrol, but it'll be byproducts. There's Boa Foods, there's Dangote Foods, there's they're not quoted, but there's Indomie and all that. Where I'm going to is that the sectors illuminate, because Nigeria has a large population, but a population that does not spend. If you want to invest in Nigeria, look for products that are being sold that people must buy. Then try to buy those companies, not the ones that people must buy, right? So not just food. So Unilever is struggling, but you see Boa Foods, pasta is now a commodity in Nigeria. So go eat pasta, they are making a lot of money, right? So you want to get pasta. Look at Okomo palm oil. Nigeria is importing palm oil. We can't meet demand. So those guys are making a lot of money. If they can be allowed to, because of insecurity, they're making a lot of money there, right? Banks, like Lumide has said, banks always seem to make money because they have the best staff in Nigeria. If you pick any industry in Nigeria, banks employ the best and the brightest in Nigeria. So they're able to invest in the growth in Nigeria. That's why they make money. They hire the best staff. and they pay them well, and those guys are able to make a lot of returns for them. So banks make money in Nigeria. Which other sector? Energy, banking, food. Which other sector are we missing in Nigeria?
But Carlos, so look at telco, for example. Telco is another interesting sector. But the problem with MTN is an exceptional company. But the problem with MTN is that they've not been able to raise their cost. You know, the cost of energy and operational costs has really hit into their margin. So at some point, they posted huge losses. And if you look at the fact that they contribute a lot to the Nigerian economy, you can't underrate that stock. So it's a stock people need to look at, you know, because while it has a negative year-to-date return, it's underperforming major in the NGX 30. It still has strong future.
They control data, right?
Yeah.
They control.
Another person I think we don't talk about is Tony Demelu. You know, this is somebody that really runs one of the most successful businesses on the NGX. I counted, I think, about 7 businesses, and 6 of them has given 6 double figures and outperform inflation rates. Now, if you look at United Capital, for example, you look at UPA, you look at Transcorp had construction, so one could argue that the exceptional return was based on that, but they show strong. So you also need to look at the personality of people you're investing on. Tony Demelu has been quite rewarding for me in the past 5 years. For this man,
Tony has an index named after him. Like ProShare has the Tony Index. They call it, and then the other guy, Dangote Index, Tony Index, and all that. But
the problem I have with Dangote is that Dangote cement is that it's not so liquid. It's not a liquid stock.
And so he's buying it back. He's buying it back.
Yeah.
Okay, let me make a quick. What about power? What about energy companies? I heard you trying to mention $10. That's energy. Transcorp. That's energy. It's energy in America. Energy is a utility. Very, very boring dividends. In Nigeria, energy looks like a growth stock. What's your take on energy?
Yeah. So if you look at Gerugu, I think it looks like it's picking. Transpower, owned by Lumelu, hasn't been so exceptional, but it has future growth, and that's because these are heavy stocks and they are not as liquid as, so you don't see a lot of retails there, but it's showing growth because I see that space expanding with the reforms President Sobo's ongoing in that sector. I think that those sectors, when the prepaid meters comes to play, well, when it increase the capacity of transparency in that sector, I think those players too get. But Carl, you can't, when you talk about the easier sectors right now on the NGX, energy, the banking sector, the insurance sector lately, you know, has been giving great returns based on the news that they have to merge. So we're going to see that consolidation we saw in the banking industry during Soludo taking shape. So the stocks, Wapik had been blowing, you know, Sun Insurance, Massad, they've been blowing. So lately, insurance stocks, but I think...
So someone is asking you what's your take on agriculture. Just for me, fine. He's saying, do you have any specific take on agriculture?
Yeah, so when you look at Presco has done decently well this year. Okumo used to be the style on the NGX, but lately, based on a lot of macros, you know, the things happening around the Nigerian, you know what's happening in terms of security, the challenges Okumo has. You cannot deny the fact that they have strong fundamentals. So it's a stock that you might want to look at and get in at the right price. But I think Nigerian and agricultural stocks and manufacturing sector will suffer for a while because look at food inflation, Carl. Look at the cost of living. Disposable income is weak. When disposable income is weak, stocks like Calipri, Nestle, they suffer. Nestle used to be 1,500 stock. Nestle has been floating around 800 for a while. And the reason part is because the company, despite the fact they've improved their revenue, their margins has been burned by exposure to FX, exchange loss, and weak disposable income. So we really need to ramp up our disposable income for those sectors too. Like America, for example, now, look at Walmart. It takes Walmart 1 hour to make $100 million in sales. We don't have that in Nigeria. So people are not really consuming Kalu. So we just really look at people that service the government or edging against their Nigerian exposure.
So overall, it's if you had a portfolio of $100, what percentage would you allocate to Nigeria? I mean, I know your age. I know what would you allocate if you
Yeah,
were.
thank you. Very good question. So this year, this is what I did. I kept 40 in the US, I kept 40 in Nigeria, and I kept 20 in Europe. Now, 40 in the US, I counted crypto. Apart from Ethereum, no, it was Ethereum, Bitcoin. Ethereum and meme coins was disastrous for me this year. It was disastrous. US stocks were fantastic. Nigerian stocks, probably the telcos, but it was exceptional. European stocks, not too bad until the French-German crisis. Not too bad. So overall, I think Nigerian stock was and the US stock really made me laugh so much.
So you put 40% in Nigeria?
Yeah.
Did you make money? Did you break even in Nigeria when you put the money in Nigeria?
I did, like, percentage-wise, I did more better than in Nigeria than in US.
US stock, gotcha.
Yeah,
what about Africans? Okay, go ahead.
Yeah, so percentage-wise, so because I understood, because I look at Nigerian stocks on a daily basis, so I try to see prices to come in, and transaction cost in Nigeria for me is quite cheaper than the US, so it was quite easy. Though you look at macro strategy, at some point macro strategy did 500%, but it has come down to as low as 350%. So yeah, Nvidia over 100%, but I didn't put so much compared to Nigerian stocks, and the reason why was because I was comfortable at the price. But next year, I think it will be a different scenario entirely. I'll definitely increase more on US debt, less on Nigerian stocks. But of course, Dangote refinery, when it comes to listing, Kalu, probably I might liquidate everything
to buy.
That.
Okay, let me ask you: were you trading or were you just doing buy and hold in Nigeria?
Just like you said, trading doesn't work for me since I do other things. I write, I do analysis. So trading doesn't really work for me, and I don't want to make my brokers rich, because you trade multiple times, you pay so much transaction cost, and you get headaches on the screen. So I do long. So I try to look at price support, resistance, and the news. So I'm long term.
Okay, so you buy and hold. So what's your main trigger? The last question on this I can ask though. What's your trigger to buy something in Nigeria? We'll talk about the sectors, but what are the triggers if you want to buy a bank? What triggers to buy it? Is it news or is it future earnings? What's your trigger? Because banks all have the same year end. We know they're all going to make money.
Naturally, Nigerian stocks are fundamentals, especially Nigerian banks. So, like the windfall tax, when everybody was crying, when I saw UB falling below 19, I just told my broker, I just gave my broker orders, when I saw GT ranting around 30, 28, 30 naira, I just, when I saw FCMB, so I'm used to the price action. I know when I feel like, okay, what's the worst that can happen? A GT, for example, in the past 2-3 years, the worst that has 16 naira. So if it gets 16 naira, can I take those losses? Yeah, it's quite decent for me. So I try to look at bad news, and I try to look at what the Nigerian economy is saying on that aspect. I don't buy when people are shouting and expect, because look at now, GT is above 15 naira, UB is 33 naira. For me, it looks like a premium because I bought quite early, So I try to look at other sectors. So, for example, I know that once MTN, Airtel starts, because I don't think the government will want MTN to close shop, because at some point MTN has to increase tariffs. So if MTN increase tariffs, definitely I expect the stock to. So, when is the time to buy? Like you said, when there's
all right, perfect. I think I just wanted to get a little bit to give us a sense of Nigerian markets. I hope most of you have listened to him. I got lots of DMs have come in, but I think Olumide has taken us through Nigerian markets. Excellent, Olumide. Let me get Miss Ella.
Hello, Mr. Kalu.
How are you doing? Go ahead.
I'm fine. Hello, Olumide. Sorry, I don't have a question,
But I wanted to drop a comment on the US stock market. So I know there was a conversation around having to invest. If you don't have a social security number, you can't really have access to the US market. So I work with an investment advisory firm, and I know it was a situation where we had to look out for options for our clients. So there's this Canadian brokerage firm, Questrade, right? So I think that's currently what our clients use to invest in the general US stock market. So you open an account, but the only thing is that you're going to have to go through a verification process. So they have lawyers in Nigeria that the thing is you have to pay, I think about $100 Canadian. You pay the lawyers, they do the verification in Nigeria and report back to the brokerage firm. So, and then the brokerage firm goes ahead to open up your account and you can trade on the wide US stock market. So I think that's a very good option for Nigerians because we have a couple of our clients who have Questrade accounts and they operate and buy stocks through the brokerage account. It's a Canadian brokerage firm. So I think that's an option people can just explore. And I mean, you will spend some money, like I said, $100 Canadian, but it's a huge what do you call it? I mean, this is still cost effective for me.
Yeah,
I think that's a very good option for Nigerians instead of having to, wait till you have a social security number or explore some other options that may not give you a access to a wide range of stocks on the US market. This gives you access to all the stocks. You can trade as you like. Yeah, so
I see it here. I'll have to look at it. I see it here. Questrade. It needs some looking into. Yeah, but good information. Out there. I mean, the point is to reduce the transaction cost. Yeah, so if this gives us that avenue, fantastic. Thanks for that information.
You're welcome.
Yeah, let's get Elijah, the Elijah Sultan. How are you doing, sir?
Good evening, Mr. Kalu. It's a pleasure to speak with you. Good evening, Olumide. Balogo, good evening. Thanks for all you do for us that do not have a financial background. It's an opportunity to learn from your feet, even through Twitter. I bought your book. It's an interesting one so far. I bought it on Kindle. But I just have this question because all that we have been hearing on the space so far is the US stocks and the Nigerian market. For people like us that live in Europe, live in the United Kingdom, what kind of advice do you have for us? Should we invest directly into the US market? I know there are some brokerage apps that you can use to do that, or because the challenge we have about investing in the Nigerian market, or maybe it is lack of education on it. Somebody like me is worried. Like if I buy some stocks in the Nigerian market, because I heard the Nigerian stock is really doing well. If it fluctuates and the Naira falls, am I going to get a return on my investment? Because that is what some of us are always worried about. And if that is not an option, what advice do you have for us? Should we invest directly in the UK? Do they have a very good stock exchange market here? Or you said you also mentioned that the US stock is really, really doing well and is one of the best. So should we just invest directly in the US stocks? That's my question. Thank you very much.
Yeah, good question. So again, what's the word now? Yes, so the principles are the same. The book is written on principles, so it's all the same. Budget is the same principle, invest, passive income, it's all the same principle. You use in America, US, Australia, anywhere. So the principles are going to work the same across the board. But if you want to invest, from the UK, you can invest directly in the assets, because what the UK guys do is they package those same ETFs or those same mutual funds, but they give it a different name. Because it's not the same. They call them mutual funds in the US. In the UK, it's unit trusts and all that. So they give a different name. For instance, the VTI is not going to be called VTI in the UK. So what you want to do is to read the description. If you want to buy, say, an ETF that invests in just the US market, just ask your broker for the UK version of the name. Then you can buy it like that, because you are in the Western world. You can buy anything, literally. if you are living in the UK or Canada. You can buy US, it doesn't matter. You don't have to have a social. This is for Nigerians that are not in the quote unquote Western world that need to have that identification to then invest in the US market. But if you're in the UK, Australia, Spain, simply get the description. So if I want to buy, for instance, real estate in the US ETF, I'm buying VNQ, right? Get that same description in the, ask your broker, what's the version in Spain? I want to get exposure to US REITs or MBS. What's the version in Spain? He will give you the ticker. That ticker will give you the same description because they just copy it, but in Spain or in UK to do the exact same purpose, the same assets underneath, but just a different name. That's the only thing you want to do. Make sure that you get, and if you go on Google and you say, what is the UK version of VTA, it will give it to you. So just make sure you have the right ticker. So if you want to buy this, just get the UK version or ask your broker, they'll give it to you. And lots of apps on the UK that you can use to do the exact same things like Robinhood and all that. There are lots of apps in the UK that you can do the exact same thing. So the point is get the principles. If you want to build your asset allocation, right? If you want to, like, if you look at the Twitter, I just shared the second Twitter page, you'll see where we say, if you are younger, you want to do more of equities. Okay, which equities? If you don't know what to do, buy everything. Then start to go, when you know more, then buy your sector. So like VT, if you look at VT on Google, that's Vanguard. VT is giving you exposure to like all the, I don't know the words used to substitute for good, but all the good stocks in the entire world. Samsung, Nvidia, Intel, Microsoft, that's VT. Everything in the entire world, right? But if you do VTI, that's giving you 5,000 stocks just in the US. If you do VTUX, that's giving you the same stocks but minus the US. If you then do VOO, that's giving you just 500 stocks just in the US alone. And it's the same thing with UK. You can buy UK stocks alone. You can buy UK banks alone. You can buy literally, you can search and get the specific ETF or mutual fund that targets a specific asset class that you want to use into your asset allocation. So if you want to build a portfolio around property, around fixed income, you can build that. Just to use, oh, this is what I want to get a ticker in UK and then just buy it. That's how you want to do it, sir. Yeah, that works for you?
Yeah, thank you very, very much. I when you were listing this asset, I was writing a couple of it down because, like you said, once you ask the UK equivalent, because I was exploring a particular thing they called FT 400 or something in the US, and when I asked for the Google for the equivalent, he said it's what we call stock ISA or cash ISA and all of that. So when you were listing this asset, I was writing a couple of them down, which I would ask for the equivalent later and take another do some research about it. If you could just mention a few things more, because then you also said that if you're younger, we should buy equity more. So if you could list a couple of more that I can do research about, I'll be very grateful. Thank you very much.
I can't do recommendations online. So I like to stop at the ETF and the sector, the broad sector. So essentially what I say is this: if you are younger, right, you have more compounding period. So you want to do more of equities. Look at the example I shared. As you get older, you want to start to transit from equities, which is variable income, to more fixed income. So what I've done is to say, okay, if I just start off, I don't know anything. I'm a 20-year-old guy, I just got employed. Okay, I'll buy VT. That means I bought everything in the entire world. But I now want to get more specific, right? And maybe I'm 25 years old. I want to target the US. I want to target Nigeria. So I'll buy VTI. That's the US. And I'll buy NSC 30. That's Nigeria. So I'm buying the index. Those are going to be the best. They're going to take 30 stocks in Nigeria or 5,400 stocks in the US, which is VTI and VX and NSE 30. That's what I'm trying to say, right? And as I get older and older, if I want to then start to buy bonds, I'll buy BND. That's the bond version. So I'm going from variable income stocks to fixed income as I get older because I want to reduce my exposure to variability and volatility as I'm older. But you can now come in and make it more customized to yourself. You can say, well, I want to retire at 65, so I can take more risk. I can do this longer. I'm not just going to buy ETFs. I want to buy specific stocks. I want to get exposed to equities or utilities or property. You can then go into those VNX and all that kind of stuff, right? VNX is real estate. What about AI? There are ETFs for AI. You can say, okay, I'm going to go into AI. But the point is, start from the top. Start from the world to the region, to the country, to the sector, then to the individual country, to the individual company. So if I want, instead of me buying Tesla, I'll say, okay, I'm going to buy the whole world. Then I'm going to buy America and China maybe. Then I'm going to now buy automobiles or AI. Then there's Tesla in there. So it gives me more of an exposure, because the more I diversify, the more I'm reducing my volatility and my Sharpe and my all that kind of stuff. That's the model portfolio theory. That's what I'm trying to do, So it's cheaper, it's diversification. That's where I'm going to with this. You've got to do more reading on this, right? So the more you get into it, the more you see things pop up. You can lots of watch Bloomberg, watch Investopedia. The more you are into those things, right, the more you know about sectors to buy. And look around you, listen to the news every day. Tell your Alexa, give me my 1 minute investment summary when I wake up to tell you. So you have all the tools, right? I don't want to give recommendations on social media on an open space like this. It's not really, because I don't know you. I don't know you. I don't know your objectives, what you want to achieve. So because I don't know that, I can't tell you what to buy. Yeah. But yeah. Your hand is up. Yeah. Do you want to say anything? Yeah, go ahead.
Yes. So just to basically help him out a little bit, since he's living in the UK now, to just give a little bit of context, beside the ISA cash and then the ISA stocks. So basically, what that means is that you're allowed to save and invest up to a certain threshold without paying taxes in the UK. So my best advice that I would give you is Vanguard, for example. Vanguard has is an American fund manager. They have an office in the UK. You can go online and then you will see all the different ETFs that they offer. They also have those for the US and then those for the UK as well. And for you can always take all these questionnaires online, so you know the kind of investor that you should be. And then they have a lot of these they already have a lot of these preformed portfolios. So you can even do the one that will give you a target. And from my research, all of them are eligible for ISA. So once you go ahead, you can subscribe and then you now let them know that, okay, this one is for your ISA. I believe that it was around £20,000. I'm not sure what the new tax law says.
Yeah,
it's now.
£20,000. You're correct.
£20,000. Okay, great. Yes. So you can also do it for your children as well. And so you can just split it across. So get your risk appetite sorted out. For your kids, it's something as simple as look for the FTSE 100 ETF. And every month, just be putting in maybe £100 or £50. I'm not sure what the minimum is. Just put it away every month. Then by the time that they're 18, you would see that, okay, things like paying their tuition will be sorted out. Sometimes you could be lucky and then you keep paying until maybe they're 25 or they're 30. And at the end of the day, they can even say that, okay, they can pay for their houses, they can have a down payment and have a down payment for their own homes and the likes. So everybody has their own little money. So those are the types of things that I think that you should be looking at. And also be very careful, because I don't know what bank you use. Some banks have their own and then they are linked to some other fund managers. But personally, I like to just, you have your bank. I believe that using your bank for money is one thing. Then look for a fund manager whose job specifically is this, and then now go for it from there. And that is the best way to go if you're in the UK.
And that's the hack she just told you. Buying for your kids. Just buy an index fund for your kids. I don't see where you go wrong with that. Just buy the index fund. Because how old are they? They are 2. And you buy them an index fund and it's got 20, 30, 40 years to grow. How do you lose money? And you reinvest the dividends. It's just impossible to lose money on that strategy. You know, in Nigeria, when I have a nephew, I have a nephew. When Zenith Bank did its IPO, I bought him 500 shares. He was just born. So that was his present. So I bought 500 shares for him. I never went to the dividends. I never got any bonus. I just bought it in his name and I left it. So I told the guy, he's now married. He's nearly 40. I told him to go to registrars and go find those stocks. And he went to the Zenith registrars and he went to find the stocks I bought for him when he was born. That's when Zenith did the IPO, the first IPO Zenith did. It's nearly in millions. I didn't spend 25,000 naira. There's no way you tell me I didn't beat inflation. It was nothing for me to do. Nothing. He's how old? He's got the Zenith shares. They gave him all his dividends. They gave him all his bonus shares for nothing. So imagine if in America, if you live in America, they have what's called an IRA, individual retirement account. If you have a business, right? You can employ your kid. Your kid can be a baby. Your kid can be 1 year old. You have to employ him. You employ him. You do a letter of employment. You use him as a model. You take a picture. So that kid is your model for your website or for your coffee holder. So you pay him a salary. But that salary you pay him, you invest into his IRA, his individual retirement account, to the Roth IRA for that kid when he is 2 years old. So you've put something into an account for the kid. He's never ever going to pay taxes because after 5 years, that money is his to do whatever he wants. He would inherit that account. He will start to work and contribute to that account for minimum 55 years. That money is going to be in that account. Explain to me how you lose money with that sort of arrangement, and it's in the tax laws. So you've got to even in same thing in Nigeria. You can open up a retirement savings account in Nigeria, put your wife and your kids as employees. You can give your kid a job. His job is to clean your office every weekend. You pay him a salary. On the salary, you pay him housing, basic, and transport. You take his whole money and you contribute to the retirement savings account. And you do it every month. From your income, from your sales, you pay him salary. It goes to his RSA. So it will be invested in that RSA for how many years in Nigeria in equity, because he's a younger guy. He'll have that RSA. When he starts to work, he will take that same RSA and start to contribute on his own. No, you set these kids up for life. So these things are not just this is the tools. When they say knowledge is power, when you know these things and you use them, this is how it's set up. You hear trust fund. This is what the rich people do. And you can do it too because it's there. But you've got to take advantage of compounding, of investment, long-term savings. So these two things I've said, you can do them tomorrow. You don't need, you can do them and it will work out for you. Yeah, thanks for that. Elijah, I'll send you the consulting fee later. Ike Meli. Ike, hi.
Hi. Good evening. Can you hear me?
I can hear you very well, sir. Go ahead.
Hi. Good evening, Carl. It's a pleasure to be here. Middle-aged guy. I live in Europe. Mine is a bit of considering what you said, multiple times about compounding. I work in healthcare. I am, good enough for that level. But in terms of compounding, would one rather, let's say you have 4 years or 5 years of steady income, you have a good job, would you rather invest in a business enterprise that has cash flow, that has capacity for exponential expansion, or invest the money in the market and within a period of 4 years, switch sides? Say you want to invest in a business now, or for example, say you, Carlo, you have a consultancy business, you have also equity in the market. Which did you do first and why? in regards to things like compounding and how much time you can put and stuff like that. What would you prioritize and why?
Okay, let me answer it this way. You know, wealth is a recent phenomenon. If you go back to the world, the history of the world, say 300 years, it's only in the last, I would say, from say 1930, did you have people becoming rich. When I mean people, ordinary people being rich. People think wealth, people have, no, people have not been rich in the world for a long time. Go back to the world if you can. There's something called Our World in Data. It would show you the history of the world from say 17 or even 1500 till to this year. You would see that from 1930, 1940, that's when you had what we call the middle class, and people actually said to become rich. That's when the French guy was writing about how the world is now changing. What's that guy's name? The French guy that wrote about on inequality, about how the rich are getting richer and the poor are getting poorer, and it's a recent phenomenon. So why are there rich people in the world today? Because of two things. One, incorporation. So you have a business and you incorporate it. In the olden days, if you're a blacksmith, you don't incorporate it. It's you. So you see Mr. Black, then your son is a blacksmith. If you die and your son dies, then the business dies. But incorporation allows wealth to be transferred without your son being a blacksmith. So you have incorporation, then you have the stock market. So you have Mr. Bill Gates. He can incorporate his idea. He can then hold those assets even if it's not working. In the olden days, if you stop being a blacksmith, then you die. You become broke. But that's not the issue. So any rich person on earth today has a business. The richest people on earth have a business. The difference between you being wealthy, millionaire, billionaire, and you just being comfortable is you own a business. That's the unique factor there. So when you say, should I open up a business or should I invest? Mr. Warren Buffett owns a business that invests. Mr. Elon Musk owns a business that builds things. So you must have a business. If you go back yesterday, I tweeted, if you live especially in America and you don't have a business, you should be flogged, especially if you're Nigerian. You cannot tell me you live in America or the UK, you don't have a business. I don't care what the business does. Do a business and say you are selling moi moi or you are selling akara. It doesn't matter. Because in America, business expenses are what they call above the line. Do you know the deductions you get for having a business? You can say you have an office in your house and your house will pay you, as your office will pay you rent. So you are paying yourself rent. So your own house, you take one room, say it's your office, then you will pay yourself rent and deduct it. I don't see some things online. No. You deduct expenses as part of your business. So why wouldn't you do that? Mr. Donald Trump does not pay taxes and he says he's smart. He's correct. The laws are there. You didn't write them. So you have to take advantage of them. So if you have a business, so back to your question, you must have the business. But the question is now, how do you allocate between that business and then your investment? That's now a real question. If you do a business, you are taking risk. Risk means volatility. That's why there's a return in business. The higher the volatility, then the prospect of higher returns goes up. But when you buy stocks, there's higher volatility, yes, than a bank. But, you don't make as much as if the business makes it. So in terms of you becoming a millionaire, it's easier for you to become a millionaire with your business than with stocks, than with putting money in the bank. So the answer is going to be to you, which one do you want to chase? Do you want to take a lot of risk and try for the business? Or do you want to go middle class and invest in stocks? Or do you just want to keep money in the bank? Like Jesus said, the guy put the money in the ground, he didn't make any money, right? But if you take the investment and you invest in the business, you potentially have the largest opportunity to become richer than buying stocks or than putting them in the bank. So it's your call. Everyone has a different risk level. If you can take the risk, do the business. It doesn't matter if the business is going to fail or succeed. It's if you can take the risk to fail or succeed, right? So that's the answer. This is the correct way to do it. It's really going to be based on your own objective. If you believe you can start a business in America and can make it, my brother, go for it.
Thank you very much, Carl. It's a pleasure. Sorry, another question. Olumide, please, what platforms can one use to access Nigerian stocks, REITs, ETFs and stuff from outside the country? Thank you, Carlo.
You're welcome.
Yeah, so like I usually say, any regulated stock app is fine. But different needs for different folks. So, for example, there are some brokers that will tell you that if you don't have like 2 to 5 million naira, you don't go near it. But I don't want to mention names. But generally, there are different brokers for different people. Traditional brokers are good for people that really want to do position, want to have good customer care advantage. I think it falls in that category. If you look at new generation app, you want to get exposed to foreign stocks, Nigerian stocks, Bamboo, Rice Vest, those ones. So it all depends on your own personality. But I'll say one thing clearly: you need your broker to issue you a CSCS. It's mandatory. You usually must have it. So if the broker goes under, your stocks don't go under, so you can transfer easily. That's what it's about. So make sure you have that.
So sorry, Olumide. A bit of the problem here is, the responsiveness. Up to this point, some of the Nigerian, platforms, established platforms, have very poor presence and responsibility online.
Yeah.
So getting across to them is very, very difficult.
I think. So these are 3 strategies. So for those in diaspora, I'll tell you that the premium brokers are quite recommended, because when I mean premium brokers, like definitely you're putting substantial amount of, so you get good feedbacks, because I get what many Nigerians say, but I use these brokers, and I can tell you that average their response is faster than Nigerian banks on the average. So it depends on the platforms you're using. Then if people like tech, for example, so I don't know how Bamboo Rice Vest works, but you can't compare with a
Olumide is just like Robinhood. He's in America. It's just like Robinhood. I use Robinhood, right? And I also use like Schwab. If you use Robinhood, you're not going to call anybody and ask anybody any question. You know what you want to buy. You go to Robinhood, you buy it. You're not going to call and say, you know what you want to do, you go and you get it. But when I use all those Schwab and Fidelity, you can actually go online, you can call and speak to one guy, the guy will tell you, blah, 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 and all that. So in Nigeria, all those brokers, it's a customer service thing, because remember, you're buying the same stocks from the same exchange, the same fee. So it's going to be really who gives you the best customer service. That's what you want to look out for. Not if it's larger, if it's smaller, who gives you the best customer service. If you can get a broker in a place that you can call the person, because you're not going to call the office, you're going to call a person, right? This person is your broker. You can say, hey, buy this stuff for me. The person will buy it for you, send you CSCS, send you reports, and you're okay with that person. If you're a smart broker, it's referrals. If I do well for you, you're going to refer me to people, I grow. But most Nigerians don't really get this customer service. And it's not the brokerage firm itself, it's the people they employ. Because it's the same platform.
Yeah, but to be honest with you, so, okay, I don't just want to be specific. So I use 4 Nigerian stock brokers, and I have 4 account managers. And when I have issues, I message them privately, And
exactly. That's the way to do it, Olumide. That's exactly what I'm saying.
So, in fact, when you even open your broker, they will give you their names to.
Olumide, when I came to Nigeria, I went to my broker. They are ladies. I bought them perfume. I bought them scarf. I gave them. The girls that work in the brokerage firm there. The guy is my personal friend, but I gave the broker girl, I gave her perfume. I went to the other house, I gave her perfume. So when I call, they will do my stuff, bam, bam. I don't. If you can't be calling Ogada, Ogada didn't buy. No. So you have to be a bit smart, If you know, you have to use sense in this thing. It's same thing in America. If you go to Starbucks, they make your coffee. It's the way you talk. They will do 2 pumps instead of 1 for you. So if you can come here, someone, you one-to-one, you say I beg, but yeah, it's customer service. There's nothing different. They're not gonna buy you shares cheaper. It's just like Olumide said, the most important thing. Get your CSCS. So you get your CSCS. When they buy for you, they transfer to your CSCS. You see it there. So you can have many brokers, you have one CS. That's really the main thing. But it's customer service in the end, right?
Yeah, and finally, just for example, he is on board. If I want to ask if
what's the name of your firm? Yeah. Where should she go to?
I think she's
okay.
Sorry. I was not okay. So my firm is called Future View.
Oh, I know Future View now. See, let me give you the ones I use. I use CSL stockbrokers. I use CSL. That's it's FCMB. It's gentleman Shubomi, a CSL stockbrokers. I use Otto Stevens. That's Tony Amolegbe's firm. He used to be the past president of CIS brokers. I use Oga Ebo's firm. Oga Ebo what's the Afri Invest. They have a stockbroking Afri Invest. There's a broken one. There's Afri Invest. There's one that they use. Christ name.
Securities.
Yeah, which one?
Is it the app that you are trying to find?
Yeah, the app. Yeah, it's Afri Invest. But they have the Optimum. Yeah, Optimus. Yeah, they do Optimus. Then oh my God, I don't want to forget anybody. I should have even said this list. I shared this list before. I have 4 of them. I'll share it again after the space. Yeah. So, even Mary Stem. But the point is, in EKN, try to get someone, because even if you have a small, indescriptive firm, even if it's a small, tiny firm or a big firm, it's the person that is your account officer that matters. You can bank with, say, Bank A, but that Bank A is massive. They have IT, but you don't have an account officer. You are floating in the water. That's my advice to you.
Wow. Okay. Yeah. I'll do what I can. Thank you so much, man.
You're welcome. And I've got to tell this guy, for the guy that was, I think just dropped, page 28 of my book, I have the risk tolerance questionnaire. So if you want to do your own risk tolerance, just go to my book, page 28. There's a risk questionnaire there. Answer the question. That tells you the kind of investor you are. So don't invest because your friend is buying. If you're a risk adverse investor, then be risk adverse, right? Don't invest because your friend is buying. Know who the kind of investor you are, and then follow through that way. Legendary, you've got the floor. What's on your mind, Legendary? Legendary going once. Legendary.
Yeah, okay, sorry.
There we go.
Yeah, I'm sorry. Okay, I'm audible, I guess.
Yes, sir.
Okay, good evening, good morning, good afternoon to everybody. Depends on where you are. A special good evening to you, Kalu. It's an amazing opportunity to be on your space today. I mean, I feel like I am in the midst of financial legends. It's an opportunity to be here. Good evening to you, Ile Jess Sultan. Yeah, good evening to you. Good evening to Olumide, and good evening to every amazing person here. Sorry, I want to ask real quick. I've been hearing so many contributions about the stock market, and I must confess that I have indeed learned a lot. I just want to ask, please, Sakalu, can I say something about crypto? Can I just make a contribution?
Go for it.
All right. Thank you so much, sir. Yeah. Just like the topic is on the space, how to invest, assets allocation principles. Yeah, I think for me, of my own opinion, I think crypto would also be a very, very, very significant way of making investments and of preserving funds. And if you're into the crypto market, if you look at the financial market now, basically speaking about crypto now in particular, you would see that this is a very, very interesting time to make those investments in the crypto market. And I mean, like, this is the time where you want to be positioned in the crypto market. And just like our boss Kalu has said about staying rich. I mean, for me, one thing I know about getting rich is all about diversification of wealth. Diversification of wealth. So you need to diversify in order to get so many streams of income. And crypto, for me, is something which would stand the test of time. And owing to the fact that the current the US okay. I thought Carl wanted to say something. Okay, owing to the fact that with the recent election now and Donald Trump coming into the United States presidency, I think he's going to give and I think the crypto market has a great future, and many persons maybe on this space might not properly understand how to switch or how to navigate the crypto space and how to get to, many persons don't understand the Web3 concept in general. When many persons hear about Web3, most persons think it's something so ambiguous that they don't get to understand. Okay, real quick, if you watch
but there's no way we're gonna talk about Web3, and I think the point is crypto is something that you should have in your portfolio, but to what percentage should you have it in your portfolio, right? Is it 1%? Is it 10%? Is it 20%? Going back to the original point we're making, right? If you are younger, yes, please have it. Maybe to a larger number. Maybe you want to go as high as 10%. If you are older, be a bit careful with it, because even though, yes, like you said, Donald Trump has courted the crypto space, the new SEC chairman is a crypto enthusiast. I'm hearing lots of talk about crypto reserve. I think there's a town in Canada has done crypto reserve. So crypto would have a bump, but we still don't have a lot of regulations around it. We still don't know where it's going to go to in the next, say, 2 to 3 years. So you still want to apply those normal risk policies. So the summary is this. Should you buy crypto? I would say it should be a part of your portfolio. In my portfolio, I have what I call FU money, right? That's just, I don't know this thing, but people are buying it. So I don't want to suffer from, had I known. So I allocate 1 to 2% of my portfolio, and I say this is just money I'm going to put away. If I lose it, that's fine. If I gain, oh, wonderful. But it's not money I'm doing that I'm going to put in there, and if I lose it, I start to cry. But again, I don't want to sit on the sidelines and say, oh, I should have bought this. So I would say, yes, have in your portfolio, take a 1%. Someone comes to you and says, let's go and buy uranium in France. You don't know anything about uranium in France, but you think it's a good idea. Okay, put that your 1% to buy uranium in France. If it turns out good. If you lose the money, don't cry. But crypto seems getting to be the utilities seem to be rising. So I won't just mention it because we're not going to do a crypto. Yes, you should have a bit of crypto in your portfolio. To what number is where we now have to say, okay.
Can I just add something here? So, we're talking about investing, right? And US stock market is very peculiar. So you don't really need to even invest in the crypto market to be exposed to the crypto market, like you said. So for example, I noticed that very smart Americans don't really like crypto, but they are exposed in the crypto. So I'll give you a good example. I got Coinbase at $32 last year. I bought MicroStrategy in January. Now, both assets have outperformed Bitcoin at that time, but directly I don't own Bitcoin. Now, the concern in the space is that there are a lot of criminals. The space is not regulated, despite the fact that it has so many features. So a lot of Nigerians lose money. So I understand when traditional investors are very skeptical about the space, despite the growth. Now, you also need to understand that this is an asset that thrives on the blockchain. This is an asset that is evolving. This is an asset that has more than 50,000 different coins. So how does an average Nigerian track? So just like Kazu said, you have to be very smart about this. So I close with this. Morgan Stanley CEO said, for those that really want to have exposure in the crypto market by force, you should have less than 5%. And if you're younger, you can consider 5 to 10. But be aware that you need some level of sophistication, particularly if you are investing vanilla. When I mean vanilla, directly to the asset, you need to know how to keep your assets safe. You need to understand that there are a lot of rug pulls. You need to understand that the space is heavily unregulated. You need to understand that liquidity is not liquidity. You need to understand that an asset can lose almost all of its value. So except for Bitcoin, you need to not be very careful. Thank you.
We can talk about crypto for 2 years, legendary. I don't think I'm going to say anything really new. I think everyone should have a bit of it. If you're not sure, do point one, right? If you're sure, do 10 or more. But I think it has evolved from being a joke. It has now evolved to being a serious asset class. That's the thing with crypto. It's now a serious asset class. I bought crypto from my US bank through the ETF. So it's no longer a joke. I don't think there's any large American fund that does not have exposure to crypto. 2 weeks ago, I saw a guy on the CNBC talking about this unique scheme where if you come to them to borrow money to build real estate, so they're like a bank, right? So you want to come and borrow $10 million to buy real estate from him. They will lend you not 10, they will lend you $12 million. Then they will tell you to take that 2 million extra and go and buy Bitcoin. So what are they doing? The Bitcoin they are lending to you forms part of their own collateral. So you buy the Bitcoin, then you take the 10 million and you build a house. The Bitcoin stays as the, should we say, the collateral and also the cash in that loan. So let's say you are building this house and now people don't want to buy the house. You can sell some Bitcoin and service your debt. Or let's say the property prices go down, but Bitcoin has stayed up. So the value of the loan itself does not then crash below the principal. So if you look at what that guy is saying, that's a utility for Bitcoin that we didn't think about before. So what happens if tomorrow MicroStrategy then says, oh, let's say another company goes to MicroStrategy and says, we want to do the exact same thing the guy has done, where we're going to borrow Bitcoin from your MicroStrategy. We don't have Bitcoin, but we're going to borrow Bitcoin from you, and we're going to ask our lenders or our borrowers to make sure that all loans for real estate include a bit of Bitcoin to make the loan, viable. Instantly, Bitcoin goes to 500,000 per Bitcoin instantly, because now every lender in the US is going to demand Bitcoin, and so no people won't do Bitcoin. They will now start to do other CNBC or any other stable coins. That's where they will go to. They will say, okay, do a stable coin or do something. But the point is that there is utility coming into this space that wasn't there before. So we can't ignore it. We can't say we're not going to do it or we're going to run away from it. We have to look at it now as a serious asset class. So it's really going to be do according to your risk profile. If you think your profile can take that volatility, do it. If you think your profile cannot take that volatility, don't do it because everyone is doing it. Maybe do 0.01 and all that. If you lose it, that's fine, right? That's how I'll put it, like that. Yeah. Legendary. So we'll have to leave it at that. Let's get Elijah. Elijah, what's in your mind? And guys, again, Elijah, go ahead. Okay, I can't hear Elijah. So guys, just so we reset the room, right? We're talking about how to invest, asset allocation principles. I've tried just to share 2 slides on my Twitter handle, guys. So if you go back to the last one I shared, the first one I shared was age-based asset allocation. So if you go back to my Twitter handle, I've only shared 2. I tried to keep it very, very short so I could relate to them. So the first one I shared was the age-based one, where I said as you get older, you want to then transit from buying variable income to going into more fixed income, because fixed income is less risky. The second one we're talking about, and I shared again, is the figure 11.3, also from my book, Let's Talk About Your Money. We were now talking about the asset classes, and you can see there are 3 profiles. So if you take that questionnaire in my book, that's in page 28, it gives you your profile. You can be aggressive, you can be moderate, you can be conservative. Aggressive simply means you can take more risk, which means you can take more equity, more shares in your portfolio. So an aggressive investor is an investor that can absorb more variations or volatility in his portfolio, which is what equity does. A conservative investor is someone that doesn't want volatility, so it's more or less, it doesn't want the principal to be affected. But the aggressive guy is saying, I can risk my principal to get a higher or to get a growth in that principal. When you put your money in the bank, your principal will never increase. You make money on your principal. But when you buy shares, your principal can go up. You can invest $100 and get $200 or $0. But when you buy, say, fixed income, your principal would never increase. You're going to make money on what you have already invested. So if you look at it, the aggressive guy, he's got 10 years to retire. So he's saying he wants to be a bit more aggressive, right? He's got more than 10 years to retire. So where's his bulk of his money? In equities. 50% of his money is in stocks because he wants to take advantage of the compounding, of the dividend reinvestment. He's taking volatility. He wants to really be in that market. Where is 30% of his investment? The alternative investment, things like Bitcoin that Allocation is talking about. Alternatives, Bitcoin, REITs, all that kind of stuff. Where is 20%? Bonds. He's not ignoring bond, but he's saying it's going to be a very, very small percentage of my income. So this is how he's building his portfolio based on who he is, based on his risk profile and his objective. But look at the guy that is conservative. He's in retirement or near to retirement. He's already retired. So the bulk of his money is in cash and bonds. So 70% of his money is in cash and bonds. He doesn't have any liberty to buy Bitcoin. No matter how good Bitcoin is, he can't buy Bitcoin because if Bitcoin changes, he's in trouble. It doesn't mean Bitcoin is good or bad. It means that this guy cannot take any risk. He's now a fixed income guy. He's a retiree. So he can't take any risk with his money. So the bulk of his funds, 70%, are in fixed income. This is the point of how you invest according to your objectives. There is no investment here that is bad. Cash isn't bad, but cash is going to be tied to what you want to accomplish. If you are a retiree, then you do more of cash and bonds. If you're a younger person that wants to invest, then you do more of equities. Elijah, go ahead.
Hello, thank you very much for this opportunity. First and foremost, I'm just grateful for an opportunity like this. I was linked to you through my friend, Eze Chikwelu, Ifeanyi Nwosu. Anyways, I'm going to go straight to my point. First and foremost, I've heard about this, your book, but I just want to know, what is that thing that would make me to want to buy it? I mean, obviously, I've been listening to some of these things that you've said. Most of the information, I'm sure we can get it from Instagram Reels and some of that, but what is that thing that would maybe push me to say, let me acquire this book? That's my first question. And my second question is obviously just trying to get my head around the Nigerian Stock Exchange and how I am able to go into the Nigerian market.
I think we've talked about the book a lot.
Thank you.
So, yeah, we've talked about the book a lot. I mean, it's, not to overflog it. I mean, thank you. We've talked about the book a lot. We don't want to overflog it. It's just a book like a normal book on investing, money. The title is Let's Talk About Your Money. It's about 227 pages of everything money. Debts, investing, budgeting, crypto, insurance, real estate. Literally any topic you want to talk about in money. But we try to make it in a language that is very, very easy for you to follow and understand. Lots of pictures, very practical. It's a to-do book, so it's practically written that you can read the book and do it tomorrow. So it's not a motivational book. We're not telling you go and get rich. We're not also showing you if you do this you get rich. We're showing you how it is done. When we talk about asset allocation, we give you the asset names, we give you the tickers. When we talk about inflation, we're telling you how inflation directly affects it. So it's a practical book. So we don't want to overflog that aspect that much. But I would say if you go on Amazon, you'll see copies of it. On the Twitter page, I'm screen sharing excerpt from it. You can have an idea of how it's written and the tone and its intent. Its intent is to educate. I didn't grow up as an investor. I learned it. I tell the story in the book, the first book. When I went to the village, my dad friend gave me 500 naira. Back then, 500 naira was like 50,000 naira. So I was in university, I was in secondary school, I got 50,000 naira during Christmas. And I went back to Lagos. And back then, Standard Bank was leaving Nigeria. Standard Bank was First Bank. Standard Bank was leaving the country. And I had watched this movie called Wall Street. I watched it during the holidays. I didn't know what the guy was talking about. That's Gordon Gekko. I just saw Gordon Gekko. He looked so nice. He was just talking with a lot of power, a lot of confidence. And I wanted to be that guy on the TV, Gordon Gekko. I wanted to do whatever the heck I was doing. That's what I wanted to do. So in my mind, I saw Standard Bank. I remember it till today. It was 50 kobo shares at 3 naira 26 kobo. That's how much Standard Bank was selling shares for. It was 50 kobo at 3 naira 26 kobo. In my mind, I assumed that what Gordon was doing was he was buying shares cheap and selling it expensive. So in my mind, I wanted to go to First Bank and buy those shares at 50 kobo, then go to where I lived and sell to my friends at 3 naira and make 2. That was my mind, because the shares were 50 kobo. So that means that as a distributor, I can buy at 50 kobo and I can sell at 3 naira 26 kobo. So I went to First Bank on Marina. I went to the office. I told the lady I want to buy those shares. And later, what shares? I said, that one. She said, okay, how much do you have? I said, 500 naira. She said, okay, how many do you want? I said, I want to buy 50 kobo what? And she looked at me and she knew where I was wrong. The lady spoke to me. It was why I'm where I am today, right? She slowed down. She explained to me what was going on. That it's not 50 kobo. It's 325 kobo. Told me if I wanted to buy the shares, I should go to there used to be a building called Customs Building. That's where all the brokers in Lagos used to stay. So I went there and that's where I bought the shares. And I started to understand, so what's the difference? And that's how I started to understand. I didn't have any books to teach. There was no internet in Nigeria. There was no phone in Nigeria. I had to read everything through going to the broker. I used to go there and I just asked them questions. There was no internet. There's no telephone. So itself is what I have. All the stuff I didn't know, I learned by doing. And my experience should be your teacher. You shouldn't have to go through the same experience I went through just to learn how to buy stocks. That's why I'm writing the book. Okay. Someone's experience is your best teacher. There are lots of things I did in my life that are horrible. I once brokered a deal for I didn't do anything. Someone said I want to sell something. Someone said I want to buy something. I put them together. I made like 5 million naira. This was way back when. Do you know I did that money? I went to London. I went to Selfridges. I bought Gucci. And I had fun. I bought a car. I went Gucci and all that. So, but now I wouldn't do that again. So when I tell people don't spend, I'm not being hypocritical. I've made the mistake. And spending money is a spirit. The day you have money is the day that girl will call you. It's not a joke. The day you have money is the day you see the advert for Gucci shoes. It just happens that way. And if you don't have a plan for your money, the money will have a plan for you. It's just like that. So if you already have a plan and money comes, you know exactly what to do with it. If you have a budget, doesn't matter if you have $1 million or $1 billion, you would know exactly what to do with it. I'm not saying don't spend them. I'm not going to come and tell you here, hey, don't. No. But have a budget. Allocate 10K for clubbing. Then you're fine. But if you don't do it that way, you're going to be broke. So I've made mistakes and I'm writing a book to teach you what to do, what I did wrong and what you do it. So trust me, 18,000 naira in Nigeria, if you bought it, you are buying at a discount because the cost is not even 18,000 to print. How much is it on Amazon? So get it. We shouldn't talk this much about the book. Get it. It's less than a month of Starbucks. Get it. Buy. I know folks buy and send to people in Nigeria. I can tell you for a fact, people do it. People buy and send because it's a very, very practical book. There's a section there for kids. How you can teach your kids about money. How you can literally say, okay, this is how you're going to do it. There's a section there on love and money. If you are dating someone, how should you talk about money with your girlfriend? When you're a girlfriend, what should you talk about money? When you are engaged, when you are married, if you are just seeing this guy for the first date, how should you approach money? I'm not talking, it's not esoteric. This is real life facts. So I hope you would don't get it for yourself. Buy 5 books, send to people, and then they would value it from you. Trust me. Yeah.
I appreciate that. I don't want to spend more time talking about it. It's just one last bit. How do you convince people to start this? Because I've got family and friends who feel like this is something absurd, crazy, where I don't have money. What words do you use to convince people to start this?
Yeah, show people success. If you look at Lumile's success, he was an account officer, became a branch manager. He wasn't rich. He didn't come from a rich home. Just hard work and knowledge. If you don't know about money, you can't succeed. I'm not teaching you how to. No. You have to understand how money talks. If you buy a car today, you don't know how to. You can know how to drive, but if you don't know how the injector works with this and that one, you're not even going to really enjoy that car. So you have to show people success, and there are people you can point to. Mr. Shugumi Balogo, he FCMB. Go and read up his story. How he, with lots of white people, he was competing with white people, foreign people that were Nigerian. Nigeria wasn't independent. He competed, created a brand in that same space, right? So you have to show success and then say, this is what I want you to be. And then people follow. People want success. Right now, people are looking at gambling. If you want to make money, you go and gamble or you do sports betting. Tony didn't gamble or do sports betting. Dangote didn't do gamble or do sports betting. Bua didn't do gamble or do sports betting. But those are the people we see. And we think that they are rich. You see guys buying Ferraris because they are musicians. But who is paying them? Who is paying them? It's not the bank guys employing them to buy the Ferrari. So look at it that way. So there are all the folks in Lekki they are middle class people in Nigeria that worked in a bank or oil company and invested, bought Lekki Phase 1. The guy I went to school with got money and bought land in Lekki Phase 3 when it was nothing. I went to America, came back, it was worth $1 million. So you've got to show people that if you understand money, you don't have to steal, you don't have to do anything, just being honest. You can take ₦1 million and buy a penny stock and make close to 100 million naira. It's possible. Linda has given you all these penny stocks insurance. Yeah, you can trade and make a lot of money. But how can you trade if you don't know? If you don't know what power, I didn't know what power value was. That's why I thought 50 kobo was 3 naira. But now everyone knows what power value was. Now you can go online and Google. You can buy, if you bought Tesla the day before the US elections and you held it till today, you made 40% minimum US dollar. Minimum. But how would you know to buy Tesla and before elections if you don't read and know that this guy was supporting Trump and if Trump won, his share was going to go up? How would you know? How would you know all that stuff? If you don't know NVIDIA, how would you play video games? You bet on a computer that uses NVIDIA chip, but you don't buy the chip itself. So again, Elijah, you've got to show success, and young people gravitate towards success. If they see people that are successful, they will go towards them. There's a time being a stockbroker in Nigeria was a very, very successful profession, even till today, because it's you go out, if you make your own money, right? All right, Elijah, I'll let you go, right? Let me get Ro. Ro, what's your line?
Thank you very much, Thomas Match. I've listened to you for a very long while, but it's my first time speaking on your space.
Thanks, sir.
Yeah, my question is, what type of advice would you give to someone who recently migrated to the US, to be specifically a graduate student, who has a couple of dollars in thousands lying in his account, and who is a newbie to all this finance, investment stuff, and what type of advice would you give to this person?
Does this person have a job?
This person is a graduate student.
Has a job.
So a graduate student could be a graduate research assistant.
I know, but has a job. Has a job. Earns income.
Yes. So he earns income through what he does as a graduate student, and has a few couple of dollars in his account, and he's in his 30s.
Okay.
What advice would you give to this person?
I'll say number one, you want to make sure you can get on the path to buying property. Get on the path to buying property. I don't know how long this person's going to stay. So if you have to have a credit score, if the person already has a job, and you have a credit score, and you have someone in the bank, that can be a down payment for a house. When you want to buy that house, you want to buy a house that you can rent out. It's not going to be your dream house, a house you can rent out. I would go and try to buy a property in a good location. It doesn't have to be just something I can rent out. That's what I'll do with that money. Down payment on a house. Get it? Because the person is living somewhere, right?
Yes, correct.
So the person is paying rent.
Yes.
But if you buy the house, that's equity. That's now on the pathway of the Americas. It's now entered into the American system. You can't lose money because eventually, if you lock that 30-year interest, if you lock that mortgage, 30-year mortgage, right? Inflation will move the rent up, but mortgage will stay fixed. If tomorrow the person has to go anywhere, fine, rent the house out. It's not a dream house. It's a 1-bedroom, 2-bedroom apartment house. Rent it out. Has come to Nigeria, moved to another state, rent it out. You own it. Give it to a company to manage for you. It's an asset. It goes to your balance sheet as an asset. The mortgage goes to your liabilities. The rent pays the liabilities. The mortgage on the asset side keeps on going up. So you're not looking for buy this, sell this, buy this, sell this. So just do that. Right? But I mean, if you're in America, broad strokes, if you're in America, the best thing you want to do, try to join the military. Whether it's going to be reserves or military, try to join because you get a lot of benefits when you join the military. A lot of benefits from driving license to better interest rates, even to how they look at you when you want to borrow. So if you can't join the military, that's fine. But if you can't, try. Number 2, try and go to school there. If you are younger, try to go to school there. So start again. If you go to America and below 30, just start again. Go to school and start again, right? You go to school, you join their system, then you graduate, you enter America. If you're a bit older, try to learn on that skill so you don't flow with them. But buying the house is your pathway to wealth. The way to get wealth in America to become middle class goes through home ownership. Don't listen to anybody telling you can't buy a house, that rent that's nonsense. They tell you do that calculation, rent is more. A few states have that, a few states don't, right? So once you own that home, you still have to pay rent. So look at it as you are substituting rent for equity. Unless you're living in your father's house, you don't have to pay rent. Okay, you might still come to buy an investment house, but that's going to be your power. And it's a very, very simple thing to do. It just takes 2 years tax returns, a credit score above 700, and down payments. And right in America, most banks, if you're a minority, will pay your down cost and closing costs. They will give you grants to pay. Most big banks like Morgan Stanley, Chase, Wells Fargo, B of A, they all have those minority programs that will help you pay. That's what I would tell the guy to do. That works for me. Yep. All right.
Thank you very much.
All right, Larry, what you, man? Hop right in. Ro, thanks. Appreciate you.
Thank you, Mr. Carlo.
Yeah, what's up, man?
Yeah, good evening. I'm really privileged to be here with you, and I want to ask you some questions. I was going to talk on diversification, and that was what the guy before now spoke about. He said he spoke on crypto, and then now he discussed property. So I want to talk about property in Nigeria. Like, what percentage do you think should be allocated in this asset allocation principle for real estate in Nigeria?
Yeah. You see that question? Because Nigeria is peculiar, we have to answer that question in a very peculiar way. You see, when you start off in financial planning, when you start off and you just start working, as a very, very young person, you have very, very low income. Very, very low income. But you have a high, so you take a lot of debt. When you get older in life, you have very, very low debt and very, very high assets because you now earn more, right? So if you are in Nigeria, you really can't afford property if you are just a starter or you just work for 5 years. There's no way you can afford property. Unless you live in a state, maybe like Jos or Ebonyi or somewhere like off the main Lagos, Port Harcourt, Abuja, those areas, you really can't afford property. So the way most folks in Nigeria buy property, they go buy land in a swamp. They buy it today, then in 10 years, development gets to that swamp. Then they now sell one plot and build their house, or they build foundation 1 year, build one wall 2 years, build the second wall 3 years. So they build the house in over 10 years. That's how most folks in Nigeria, the real normal folks, build house. Because we don't get a mortgage, unless you work for a company that gives you mortgage loan, it's very, very hard to get a mortgage loan in Nigeria. So when you say what percentage should be in property, your first objective in property is to reduce your rent. Because rent in Nigeria is a killer. So if you work in Lagos State, for instance, your objective is not even to invest in property, is to try to see if you can get your own abode. Fine, you can do all those, let's join money and buy one house and rent out. That is investment, that's fine. But try to get your own abode. So you're going to try to buy land now, to be buy land in Ekpe. So that looks very, very far. But in 20 years' time, it's going to be very, very close. When they were selling land in Lekki Phase 2, there were monkeys and swamps. When I was in university, Mobile, that Mobile place, that Mobile city in Mobile was surrounded by swamps with alligators. That Mobile place you see, Mobile, where Mobile is, was swamps and alligators when they built that place. You know, so that's your first objective: how to secure and eliminate rent from your expenses. Remember, we said before you invest, you look at your expenses. If you do your expenses in Lagos, your largest expense is going to be either rent or food. If you are poorer, it's going to be food. So this is how you know if you are rich in Lagos. If you spend more than 50% of your income on food, you are poor. If you spend it on rent, you are middle class. So you want to try to reduce that expense by, say, buying something that you can build later on. That's if your company doesn't give you housing allowance, you don't get a mortgage, right? But if we take that aside and we say you want to invest in property in Nigeria, remember that in Lagos, rental yield is very, very low. The folks that make money in property are folks that build and sell. So they build for 100 million, sell for 200 million, and run away. If you are building to rent out, it's very, very low rental income. You get less than 5 or 10%. You see the point I'm making? So you have to be very careful about that. I would say your objective is to try to replace your cost on rental. If you can do that, that's 100% return to you right there. Does that help?
Yeah, thank you, Mr. Kalu. That helps, but I feel like maybe I didn't position the question right. I was asking on percentage for the allocation. I would say it's not for me. I'm actually a real estate person. So like I was going to discuss something. So I wanted to like hear your view on the percentage allocation first, and then actually have something to say. I'm not necessarily selling, but I just want to like talk about an unearned income. So how you can actually invest in real estate, just like passively too. It's still like buying stocks.
Yeah, so look at it this way. Again, it goes back to my answer, right? The apart from stocks in Nigeria, the largest investments that have a return in terms of dividend yield are REITs. I think if you look at the top 3 dividend-paying stocks in Nigeria, I think number 3 is a REIT. That's the SLS. So if you're investing in property in Nigeria via a REIT on the stock market, you're looking for income. So it goes back to what's your objective. If you're a young person, you're not looking for income for now. You're looking to buy an asset that is undervalued today that you can hold for the 20 years. So if you are younger, you're not doing more of fixed income today. This goes back to the answer. How old is this person? If you are older, definitely you want to do more of REITs, more of fixed income. But as a younger person, you are trying to buy the property at a reduced price. If you're an older person, you are trying to buy the REIT on the floor of the exchange to get the income flow, because your objective at that age is income. But a younger person doesn't have an income objective. A younger person has an asset accumulation objective at that younger age. So it's going to take debt to buy an asset. Does that answer your question?
Yes, it does. It does.
I see you saying yes, it does in a bit.
Yeah.
I'm saying the way you have to look at it. If you look at it this way. You are selling property. If you want to sell property to a younger person and to an older person, there are two different mindsets here. An older person wants to live in that property. It's not going to flip that property. A younger person is going to flip that property. So they are looking at that property with the younger person is saying, can this property rise 100% so I can flip it? The older person is saying, is it safe for me to live in this place? So a younger person wants to accumulate assets. An older person wants to make income. Look at it that way. There are two different people. So property is there's nothing good or bad in property, but who are you selling to? Property on the stock exchange is income. Property out of the stock exchange is asset appreciation. If I buy a house in Ikoyi today and it's not on the stock exchange, the way I make money is to sell that house. If I buy a house that is on a REIT on the stock market, the way I make money is the income from the rental from that house on the stock market. It's the same property, but they are different. Investors look at them differently. So you have to know who you are talking to then know this is how I'm going to present the benefits of that. Real estate is fixed income. That's what it is. Fixed income.
Okay. Yes. I agree with you because my company, what we do like we are a price maker market. Like we are a price giver. So I agree with you. We have some fixed amounts. So I would say like thank you for that. I don't want to like come to this space to sell. I just want to like share knowledge. So
I appreciate that. Thank you, sir.
All right, thank you very much.
All right, excellent. Let's get to Otwell. Hotel Yar. I can't pronounce that. Big Brova.
Mr. Carter. Yeah. Good evening. Can you hear me?
I can, sir. How you doing?
I'm good. All right. So I just want to touch a bit about my own experience in investing. I think I started investing sometimes 2020 after a lot of research and everything. And one of the things I just learned, like you said, just in agreement with what you said, is having an investment outlook. Like, what's the purpose of your investment? What are you investing for? Olumide touched about, people investing in, thinking that betting is investment and all of that. And even then, I said a lot of my colleagues then, they were doing a lot of some of this agri investing where they give you like a very, very high return on investment and all that. And I always ask them that, okay, what's the purpose of this money? Like, if you're putting this money, even if you get a 50%, so what next? I think that if you're young, like I said, you need to have like a very, very long outlook. Like my investment journey is 20 years from now. Like basically, it's essentially like my retirement fund. So it's very, very important for you to have that outlook. I don't care what the market is saying. Like Olumide says a lot of things about how energy is doing well this year. For me, at the end of the day, I really don't look at those bumps. I barely check my portfolio. I don't care what's happening. If the market is going up, I just tune out those noise and just focus on that end goal. I think it's very important for a lot of people because as much as possible, if you have a day job and you have something that you're doing, you don't want to focus on active investment. You don't want to see what the market is doing because, it can push you into reaction. The biggest risk for an investor is your emotions, right? You might just, get to panic and there's always this distraction. There's always a new kid on the block. Find an asset class that kind of like fits your risk profile and kind of aligns with what you want to achieve and just stick to it and just forget about it. Like whatever makes you sleep well at night, So personally, if you look at Nigeria, I live in Nigeria, I work in Nigeria, so I'm overexposed to Nigeria as the way I see it. And I've had conversations with Olumide about this before, that I don't really believe in investing in Nigeria any further than my skills that I render for work and what I get. I have a pension fund, which is also some form of like exposure to the Nigerian market. So right now, all my investment is in the US market, and the US market because for a number of things. This is like the most advanced economy in the world. This is the biggest economy in the world. But also because of the U.S. institution, because of democracy in the U.S., because rule of law in the U.S., and that's one thing that the U.S. has over a lot of other BRICS and some of the other upcoming nations, even China. There is no rule of law in China, and this is very important when you look at investment. So those are the things that I consider. The center of innovation right now is still the U.S. So a lot of the innovative companies that are coming off the stream. So I'm taking a bet on the U.S. that, the U.S. is going to always have that being the center of innovation and also having the rule of law, having the biggest military in the world and all of that. So all of those things are the U.S. equity market kind of embody some of these advantages that the U.S. have. What else do I want to talk about? In terms of my own investment, I tend to use UK and I domicile in Ireland because I get to get tax advantages. I use ETF mostly, Vanguard ETF. But I use Irish domiciled because investment also comes with tax. You have to pay withholding tax in the US.
Explain that to me. So you say you're domiciled in the explain that to me. How does that work? What you do?
Okay, cool. So, first principles. If you're investing in the US, in the US equity, what do you call this? sorry, the word just escaped me. You know, you get to dividends that is paid on your investment. The dividend that is paid on your investment, on your equity, the U.S. government take 30% of it as withholding tax. If you are a non-U.S. citizen, this is like 100%, you know. This is well known. A lot of people don't say it, but it's well known. Now, there are some countries that have a tax treaty with the U.S. And because they have that tax treaty, that investment becomes 15% because they have that tax treaty. And Ireland has that tax treaty with the US. So by targeting ETF that are domiciled in Ireland, so for example, the S&P 500, which is the ETF that I basically use, that's the ETF I use. I look for the Irish version from Vanguard, which is VUSA, which is domiciled in Ireland. And that ensures that rather than having 30% of dividend paid on the equities that are in that fund, just 15%. So I kind of just make a savings of 15%. There's also the U.S. property tax. I think they said, I was reading somewhere that this has been modified, which essentially says that, and you guys can do your research on this and don't take my word for it. I think the modification to the tax, recent taxation in the U.S. they said they modified it. But before, the U.S. government can confiscate up to 40% of your financial assets in the U.S. if you die. And they can confiscate up to 40% of your financial asset. Depends on threshold. And this is U.S. law too. So again, being domiciled in Ireland essentially just means that you're not affected by this.
Okay, I get what you're saying. So is the VUSA, is it available in Nigerian apps? That VUSA.
The VUSA, I came in. I use the VUSA. I think it's mostly European app because a lot of Nigerian app.
They don't have it. They don't have it.
Yeah, but can you see the problem I have now? Like, Otta is an upper caste Nigerian. From where you can see that he understands tax advantages and he edges properly. Now, take it back to the average Nigerian that is earning less than 150,000. You can't even have such facilities. He is well traveled, despite the fact that he is exposed in Nigeria. He has that tentacle to expand, which makes a lot of sense. I don't have a problem with upper or rich Nigerians investing, but a Nigerian that cannot even afford a macro account in Standard Chartered or cannot even maintain a mutual fund account for 6 months, you are thinking of, that's where the problem is.
But the cool thing is that anyone listening to this space, before we started off with talking about that the costs are high, now Otta is saying that a way you can avoid that withholding taxes to buy through Ireland. So if you guys have picked it up here, this is the point I make. It has to be the experience of others that guide you.
Because tax transaction, like that's why many of us in Europe we use Swiss or we use offshore, because European tax are not cheap. And even the fact that you are investing in America, like you said, there's tax that a lot of Nigerians are not aware of that you need to factor. So when you see a stock when you see someone posted, I made 150%, it's only in crypto you see that. And even the Europeans are already coming with that with Mika approach. Now they're taxing crypto assets in future. So you have to be very cautious about what tax treaty you're entering into. What you need to ask your broker, you need to ask your tax financial lawyer, what are the tax advantages? Why am I holding this asset? Like Carlo mentioned, like in US, if you hold a stock for less than 12 months, if you hold a stock for more than 12 months, capital gains vary. Yeah. So I like the conversation here.
Yeah. Also, if you can find out if it's available, just let me know, please. I can share after the space.
Definitely. That Nigerian that was earning around like 150,000 naira, like that was me. And that was me some years back, not so long ago. I wasn't earning much, so what I just did was I just invested in myself. I'm an IT infrastructure engineer. I just upgraded, my skill set. I invested in buying some, equipment, to allow me to learn and improve myself and kind of just, improve my employability. Not long after that, I got an opportunity. I got a job, and which kind of increased my income substantially. And so immediately my income increased. Of course, it's not like maybe I was like homeless or suffering or something like that, but I kind of just realized that, okay, my income has increased considerably. What am I going to do? And so that led me to a rabbit hole of looking at, investing and de-risking myself, because I'm in Nigeria, so I identify a lot of risk. What are the risks? The risk of Nigeria even collapsing is part of the reason why I didn't even invest in any Nigerian denominated asset.
Otta, just to be clear, so you work in Nigeria but you earn abroad. Is that what's going on?
I earn Naira. No, I earn in Naira. Actually, I earn in Naira.
Okay, so
what I do every time I get I have my budget. I kind of just give myself a budget that I work with. And so every time I max out all the loans. So I did a little bit of, maybe I shouldn't say, I did a little bit of what you can consider shorting the Naira or something. So I kind of just max out all my work loans at the beginning of the year. I just take all the loans I'm eligible to, buy USD, and that's to lock down the price of USD in January. And I just put that into my portfolio. But before then, I needed to know what portfolio I needed that will work with me. Some of the things that helped me was one of the things that inspired me is John Bogle. So he was one person that really inspired me. I heard about him on NPR, Planet Money. It's one of those podcasts I actually listened to that was of great help to me. When I read about John Bogle, the father of index investing, and I kind of just followed his principle, listened to a lot of his interviews, and it kind of made a lot of sense. This is principle of get rich slow, which is like, tune out the noise and just focus on steady compounding of your investment, rather than just trying to chase the latest fad. And I also went to, there is a wiki called Boglehead. I don't know the exact name, but if you Google Boglehead, they have a wiki where they talk about all of these things. They talk about tax efficient investing, talk about but they really just focus on things like index investing, like passive investing, essentially.
Just for people are following, what you're saying is the fancy word for what we're saying, which is buy and hold.
Yeah.
Buy. Yeah. So number one, find a good company. Number two, you buy it, then you reinvest your dividends, and you just sit on it. I read somewhere that the greatest impediment to becoming rich in the stock market is patience. I read somewhere. So just patience, just sitting in the room and doing nothing. Warren Buffett has been he sold Bank of America. He just sat down, did nothing. Now he's buying.
Yeah.
Also, I appreciate. I want to. You have a lot to say, but I want to get some other guys to come in here. I do appreciate. I think you've shared a lot. But
thank you. Sorry, Carlo, I just want to say one more thing about properties, because I noted this thing down. One thing people can look at is hedge mortgage. Things like walking through. If you happen to have the opportunity to have NHF. It's a great way to acquire property on hedge, and with the interest at 6%, there are cuts to it, but there are things that you can do. For example, the government is doing these renewed homes on their website. It's a great opportunity for you to try to leverage. It's just about your leverage. Try to see if you can afford some of those things. The houses there are like maybe 12.5 million or something. The ones in the major city are like maybe 22.5 million. But this is on mortgage. You can get like a 30 years mortgage, which is just fantastic. It's just a miracle. So it's something people should.
I say Nigeria is offering those homes at 30-year mortgage.
Yes, absolutely.
Wow.
Yes, depending on the age, actually. Depending on your age. So if you are above 30, for every year you're above 30, you just deduct it from the mortgage. So if you are 40, then it should be 20 years.
And that's federal government homes, right?
This federal renewed homes. It's the current administration's signature project, and the idea is that they want to build 20,000 housing units. I've been to their site in Karsana in Abuja, and the project is just going very, very far. I think that a lot of people should keep your ears on you have to do a lot of research, keep your ears on the ground, try to see some of these opportunities. So thank you very much.
It'd be nice to have them come and talk about it here, like, just, hey, what's it all about, so people can take advantage of it. It would be nice. If they can't come, I'll do some research.
Yeah, I can just message you, send you their website. They are very, very rare. I'm sure they'll be glad, because when I signed up for it, they reached out to me. They called me, they reached out to me, answered all the questions I had. So okay. I have no doubt that they'll be glad to come and for you to meet with them.
Yeah, because if a young person, a young person in Nigeria, 30-year mortgage with a house, you should get it without thinking. We should just mandate you if you are just go get it. Yeah,
6%.
Mandate. We just put a mandate. Go get it, everyone. If you're just go get it. No, don't. I'm like, just go get it. Yeah, perfect. Thanks. Appreciate that. Abdullah Dahir Rabiu. How you doing, sir?
Yeah, good evening, sir.
How you doing?
I'm doing great.
Excellent.
I must really say this space is really educational, and the questions I really wanted to ask, and I've already gotten answers to most of them in the course of discussions.
Excellent.
So I guess I'll just give space to the next speaker.
Excellent. You're welcome. I'll get LVTH Igod.
Hey, Paulo. Oh, the man with the knowledge, the man, the myth, the legend. Even the few minutes that I've been here, listening to other people speak, I'm always blown away, honestly. But straight to the business, right? So, with the recent significant increase in the U.S. debt, and the signs are there that there could potentially be a recession in the near future, right? It seems like there's an increased risk for asset holders and investments that are based or targeting the United States market. So I myself, I have been trying to diversify, right? I have the standard asset classes that are internationally exposed, but then at the same time there's a regulatory risk on the international market, which doesn't make it any better. I haven't gotten into real estate investment trust. That is the risk that you talked about. My key question here is that I want to get into the Nigerian stock market, right? I haven't been able to do that, and that is because I think there are more barriers to entry than most places on earth. From a novice standpoint, someone that doesn't know anything, right? How would you recommend that someone that doesn't know their left from their right tap into the potential economic growth that is coming to Nigeria? Maybe not in the near future, but I can see some reforms being made which could potentially be a springboard to greater economic prosperity. So that's the question that I had.
Yeah, great question. Olumide is still here. Great question. I would say you just have to get a broker. Get a broker and open up a CSCS. And it's easier in Nigeria. I don't see any barrier. Nigeria is very, very easy. All you need, if you live abroad, you have to send your documentation back to Nigeria. So, I know most of these guys will ask for your ID. So hit them up on social media and say, I want to open up an account. They'll send you the paperwork. You do it. You scan your ID back to them. They open you an account, and it's easier. You have an advantage. You are investing from dollar to naira, so you have an implicit discount when you're buying Nigerian shares, because then you're going to buy more because you are doing FPI, right? So if you earn dollars, Nigeria is a steal right now. It's an advantage for you. Even if you buy the banks, like Olumide has highlighted earlier, so it's an advantage for you. It's easier. I'm not sure of the barrier you're speaking of. Like Olumide has. Okay, go ahead.
I think my barrier is largely lack of knowledge.
Oh, right? I see.
Limited information. I think that can count as a barrier. I do leverage a treasury bill, which actually the interest rate is one of the highest in the world, right? So that is
what returns do you get on treasury bills?
I get about almost 25%.
What if I told you the Nigerian stock market, if you bought the entire index, the Nigerian All Share ASI, do you know how much you're making year to date? 35%. You're beating inflation in Nigeria. So if you bought the ASI index in Nigeria, you're making 35% year to date. 35.
That's actually very impressive.
Yeah, and this is all. This includes the bad guys and the good guys, right?
The good guys.
So if you bought the main board, they're making 42%. If you bought the ASE index, they're making 147%. If you bought insurance, 92%. If you bought oil and gas, 160%.
Exactly.
Pension board. If you buy stocks that only the PFAs buy, 36%. Value index 96%.
Yeah, can you see those numbers? But
crazy number.
That was why I said this thing that I understand the perspective, the historical problems Nigerian stock market has had, but which market doesn't have its own problems, And definitely you can't compare the world's most powerful economy, the United States. That's the biggest, largest, most liquid, most efficient, most glorious market. But however, as a Nigerian, being in Nigeria or being exposed in Nigeria or having Nigerian blood roots, there are still opportunities. I still say that the richest Nigerians are heavily exposed in Nigerian stock market. I don't think there are anybody that criticizes the dollar that is as rich as Tony Olumelu, as rich as Dangote, Femi Otedola. These guys are heavily. So what you just need to do is acquire the knowledge around the space. And you see, the thing about Nigerian stock market again is that there are not so many companies. The companies listed on the Nigerian stock market is less than 200. In the United States alone, if you look at the Nasdaq, more than 4,000, they have more than 4,500. So it's very easy for you to focus. So you just look at which stocks are easy for me. I tell people for starters, start with bank stocks because they are liquid. What I mean by liquid is that you can buy and sell at a fair price. Fair price means the price that is being quoted, because sometimes there are some stocks, even after making money, it becomes difficult to sell because there are no, our market makers is not as sophisticated as what we have in the United States. So you have to be very, very careful from the start. Understand how to get in. And just like Kanu had highlighted the returns, tell me. That's why I said that for example, energy stocks, I showed my friend, it was like a genius. I said, no, it's not a genius. The market was all green. So it wasn't about being a genius.
Yeah, it's a lot of stocks. I mean, I'm looking at the dividend. If you bought stocks that pay a dividend, so that's the dividend yield index, 118%. It's crazy.
And Carlo, that is like, those are very impressive numbers. Personally, right, I have become very bullish on Nigeria. Like, despite the economic turmoils, there are things that I've started like noticing. I do go back to Nigeria. I mean, at minimum twice every year. So I do see, like, yes, there's a lot of like at the level there's a lot of economic challenges, but I recently sold one of the, like, a land that I've had since 2000 or whatever. I sold it to a very international, like, big brand hotel. What are these people seeing in Nigeria? And to be specific, I'm referring to Hyatt Hotel, the Hyatt Global. They haven't launched yet, but they acquired the land that I used to own in.
But what state was this? What state?
Lagos, Jerry, Ikeja, Lagos.
Yeah, I mean, I was in Nigeria too, and Nigeria is like how Rio or is how Brazil was maybe in the 1970s, where you have high rises and helicopters and slums. That's the problem with Nigeria. Is that there's copious consumption. You see a Rolls Royce rolling down the street in Lagos, and right beside that Rolls Royce, you see someone begging for money just to buy bread. That's the problem with Nigeria. There's so much. The gap, the Gini coefficient is so wide. Like, if you had told me they were buying this land in, say, Abia, Jos, Kebbi, I'll sit up. Because that's where we have the problem with Nigeria is that Lagos is a bubble. Lagos is zoned out. Lagos is growing faster than many cities in the United States of America. There's nothing you really would want in Lagos that you won't find in, say, Florida. I know a guy, personal story. His bank wanted to open a branch in Nigeria. They couldn't get someone to come to Nigeria. And when I met this guy, he was staying in a cool hotel. I hope he's not listening. And he was saying, man, I can't stay in Nigeria. I just can't stay. I was living in a cool hotel, working in VI. I took him went out that evening, went to somewhere in Lagos. The guy saw the life in Lagos. He was calling his friends. This is like Miami. The guy stayed back in Nigeria. Lagos is a different kettle of fish. You know, you go to Lekki Phase 1, all across that waterway, you see there are now Lebanese restaurants, isn't it? And you see guys coming with boats. They come with boats, and then they get off the boats and they walk into the restaurant on freaking lagoon, you know. And you leave that area and you walk down, and then you see housemaids walking from the homes in Ikoyi to get a taxi in CMS. So that's the country. It's really, but you know, I'm bullish just like you. Like I said, that's why I'm having this space, right?
Let me give you my second indication.
Yeah, go for it. Go for it.
I think sometime last year, December 2023, I bought some properties on Independence Layout in Enugu State, close to the CBN Bank, right? I have received, personally, multiple, that zone itself, the level of money coming into that zone, and people that are just like investing, building things. Yes, it's not the grandest of edifices, but I am seeing those things. I'm seeing that there's a lot of hope in what is going on, and that is primarily what is driving my own ambition as well. Okay, this stock market that I had no clue about, I want to learn it.
No, I agree.
I appreciate what you do, Carlo. I'm gonna drop for the next person. Olumide, I followed you. I'll probably DM you. Hopefully, you make time so we can connect.
If you have #1 million in Nigeria, you have #1 million, right? And you open up something like Chuck E. Cheese or in Lagos, you clean out. Starbucks, if there's Starbucks to come to Lagos, that's the day they know that there is money in Nigeria. Because there's a lot of bad rap about Nigeria, but there's a lot of people that just want to, we're expensive. I know a guy that opened up a restaurant in Lagos, and it was a chain, and they said you had to buy the beef from America. They were flying the beef in and all the cheese in because they had to keep that same standard. The beef, the cheese, whatever, and then they'll warm it. And the one burger was like $5,000 back then. So we have to Nigeria is like maybe India, but the Indians seem to they are moving ahead now. They seem to be building their infrastructure. They've sort of gotten people employed using this telecom and IT servicing. The big issue in Nigeria is that we don't have anything generating employment. Google the unemployment rate in Philippines. 96%. Everybody's working call center. Same thing in Thailand. So they have a lot of their youth guys that are employed. They don't have to be paid a lot, but everybody's employed. So they can all go out on a Friday. They can all buy new shoes. They can all buy new phones. So the population is there's consumption happening. If you build homes, 1-bedroom flat, people will rent it. You can't build. Apart from Lagos, if you build anything luxury in, say, outside Lagos, maybe Abuja, who will rent it? You're paying in dollars.
Yeah, kind of true, but I think another problem is, to be honest with you, I think we have a culture problem. If you look at, you are the most popular finance person on Twitter space, on Twitter, and it's intentional because you've been very focused on finance issues. The problem is that Nigerians don't like finance, and I do understand why. Because I used to think that it was a poverty issue. If you look at our website, I try to understand the behavioral reasons. Nigerians like porn and gambling.
But it's all about the world, since it's all over the world, people like porn.
Let me put it to why our world is very peculiar. Now, if you look at UK, France, Germany, you don't see porn gambling on the first 15 sites. You don't see. Yankees do more. You don't see it. You don't see it. I'm not saying that, yes, we're a very young population, but you don't see Yankee putting porn or gambling on their first 15 websites. How can sports bet be more popular than Facebook, YouTube, Instagram, websites? Now, so yes, I understand what you're saying, but we can always argue about poverty here, but there's also a cultural problem here. Let's be honest here. And the cultural problem is also affecting interest in finance, because many Nigerians like crypto not because they just like crypto. Crypto is fast. You can make 5x. They'll tell you, you can make 6x in 3 weeks. You can make 4x if you are smart or something like that.
Yeah, you're right. Because if we did a space and we said pay 100,000 and we'll give you how to make 100 grand in. The space will be full. The space will be full.
You'll be driving Ferrari by Monday afternoon from display to revenue. I'm telling you. And so it tells you why it's very easy to Nigerians get swindled. It's very easy. So yeah, I agree with you that unemployment is high. But we really need to also have the conversation of why there's little interest in personal finance, because we really need it as a country. Because just like you said, different countries with different problems. But I don't think we are the worst country on this earth. I don't think, because Nigerians are very smart people. We are diverse. We like technology. We like Western values. We are not as aggressive as many people think we are. We have strong cultural history. So I think we really need to talk about that fact that a gambler is more popular than a Tony Edumelu. A gambler has more voice than a Fola Adiola. That was not how we grew up, Kalu.